morning, ladies and gentlemen, our distinguished guests. We'd like to welcome all of you to Asian Insurance Meet 2023, which is a three-day conference with the theme of building resilience of insurance towards emerging risk. The conference is convened by Nepal Insurance Authority in cooperation with International Association of Insurance Supervisors, Asian Development Bank, and Access to Insurance Initiative. We are delighted to have insurance supervisors from the Asian region today, along with the insurers, reinsurers, the board members of Nepal Insurance Authority, representatives from IAIS, ADB, and A2II, all of our international regulators from all around the world. We are extremely delighted to have you all. The three-day summit will be focusing around discussions for the challenges and opportunities that lie ahead of the insurance industry. And the conference will focus particularly on issues of impacts of climate change and risk imposed to the insurance sector, moving towards risk-based regimes, developing inclusive insurance, incorporating digital innovation, implementing index-based insurance, and discussing capacity building approaches. We are confident that these sessions that we'll have will be fruitful, will be insightful, and will be engaging as well. Once again, thank you all for being present here today on the first day of the Asian Insurance Meet. And now, ladies and gentlemen, starting our event, I'd like to invite on stage an experienced personality whose career spans over 35 years, and he has occupied pivotal roles across various ministries in Nepal, notably Secretary of Home Ministry of Nepal. He has also played a significant role in shaping policies and implementing regulations for promoting good governance, economic growth, and social welfare. His leadership and vision has contributed significantly in the stability and growth of insurance industry in Nepal. Ladies and gentlemen, with a big round of applause, please to welcome Mr. Surya Prasad Silwal on stage, Chairman, Nepal Insurance Authority, for his welcome remarks.
Excellencies, distinguished participants, ladies and gentlemen, it gives me great pleasure and honor to extend you all a very warm welcome in this auspicious ceremony. I feel honored to welcome the participants from various jurisdictions to this Asian Insurance Meet 2023 with the theme of building resilience of insurance toward emerging risks. I am confident that this event will prove to be a catalyst for strengthening international collaboration and cooperation among the fellow regulators of the region. Conferences like this provides us a unique opportunity to explore and discuss the challenges and opportunity that lie ahead for the insurance sector, share best practices, and develop common strategies that will lead to a holistic development of the insurance sector, meeting the realities of today as well as the preparing of demand of future. Distinguished guests, first of all, I would take this opportunity to express my thankfulness to the team of Nepal Insurance Authority for organizing this significant event. I would also like to extend my appreciation to our co-organizers, the International Association of Insurance Supervisors, the Asian Development Bank, and the Access to Insurance Initiatives. Moreover, I would like to acknowledge the support of our official media partner, Asia Insurance Review. And finally, my utmost gratitude to all the participants who have honored our invitation and gathered here today to make this event a grand success. As we gather here, it is crucial to recognize the evolving nature of risk in the global landscape. The rapid pace of technological advancement, climate change, pandemics, cyber threats, and geopolitical shifts have presented our industry with unprecedented challenges. These emerging risks have the potential to disrupt not only individual insurance companies, but also the entire sector, threatening financial stability and the protection of policyholders. We are privileged to have distinguished speakers who will shed light on critical issues and enlighten us with the international practices and approaches adopted by advanced jurisdictions, thus presenting us with great learning opportunities. The South Asian region, and particularly Nepal, is one of the most vulnerable regions that has been impacted by climate change and natural disasters. The mega earthquake of 2015 caused immense economic loss to Nepal. However, only a fraction of this was insured. The government of Nepal was not prepared to finance, nor had access of contingency financing to absorb the loss, recover and rebuild following the disaster, and the international community had to contribute large sums for rebuilding the process. This has led to the realization of insurance as a viable option for such emergency situations in the region. Thus, catastrophic and emerging risks can have substantial impact on underwriting and investment and can be costly for insurers by increased claims, financial losses, and operational challenges. Conventional risk management is ineffective without a clear understanding of risk factors. Ladies and gentlemen, Nepal Insurance Authority, being the sole regulator of insurance sector in Nepal, has been proactive in development of insurance industry and adopting international best practices. The enactment of Insurance Act 2022 has bestowed us with additional powers and responsibilities too. In the light of this, Nepal Insurance Authority has intensified the work of timely amendment of existing laws by adopting the principles and practices prevailing internationally. The second strategic plan of Nepal Insurance Authority, comprising of 8 strategic pillars for the period 2023-2027, will prove invaluable to develop, systematize, and regularize the entire insurance industry within the country. Talking about the recent practices, Nepal Insurance Authority, in one hand, has adopted the strategy of merger and acquisition to streamline the insurance industry and promote fair practices. This has resulted in downsizing the number of insurers to 31 from previous 41, out of which there are 15 life insurers, 14 non-life insurers, and 2 reinsurers operating at present. On the other hand, to promote insurance awareness and decentralize the supervisory activity, Nepal Insurance Authority has established provincial offices in 6 out of 7 provinces of the country. Our focus now has shifted to rural and marginalized communities. Additionally, we have encouraged the establishment of dedicated microinsurers. By far, Nepal Insurance Authority has given operating license to 4 microinsurance companies, 2 life and 2 non-life, and the process of giving licenses to 3 microinsurances is on process. Furthermore, Nepal Insurance Authority is moving toward digitization with going toward paperless organization. Digital registration and renewal of insurance agents and surveyors has been started. The authority has also been taking necessary steps for establishment of Insurance Information Center, Insurance Academy, and Insurance Development Fund. Demand for disaster insurance and reinsurance is expected to expand with the focus in prioritizing disaster risk financing in National Strategic Action Plan for Disaster Risk Reduction 2017 to 2030 for the management of residual risk. Nepal Insurance Authority is moving toward risk-based approach to adopt international best practices and build resilience toward the emerging risk in the insurance sector. Distinguished guests, as regulators, we play a pivotal role in ensuring the stability and soundness of the insurance sector. We must embrace the task of formulating policies and regulatory frameworks that foster resilience and address emerging risks. We have a critical role to play in ensuring that the industry is adequately prepared to manage emerging risks, posing challenges to not only the insurance industry, but the financial system as a whole. This requires a dynamic and forward-thinking approach that keeps pace with the rapidly changing risk landscape. Furthermore, it is very important to acknowledge the importance of cooperation and collaboration among regulatory bodies, industry players, and international organizations. The challenges we face are global in nature, transcending borders and jurisdictions. By working together, we can leverage our collective expertise and resources to develop robust risk management practices and implement effective supervisory measures. Hence, we must continue to collaborate and exchange ideas to identify emerging risks and develop effective strategy to manage and mitigate them. I encourage all participants to actively engage in the discussion, exchange ideas, and propose innovative solutions throughout this conference. Let us harness the power of knowledge sharing and collective wisdom to build a resilient insurance sector that can withstand the challenges of tomorrow. Once again, I am most grateful for your participation and support. Thank you very much.
Thank you very much, Mr. Silwal, for setting the tone of the event and highlighting some key aspects of the insurance meet as well. Emerging risks such as climate change, cybersecurity, and a pandemic present significant challenges to the industry's ability to fulfill its role as a key contributor to financial stability and economic growth. But adapting to these changes and risks and moving forward is a must, and we look forward to engaging discussions on these very topics to help share experiences, best practices, and policies. Ladies and gentlemen, this event today, day one of the Asian Insurance Meet 2023, is open only to regulators, and since very special few of you are here, we'd like to have a very small introduction session here. We have our mics ready, so I think it's a fantastic opportunity to get to know each other in a small group a bit better as well. So maybe we can start from right in front of me. Just your name, your company, and your title, please.
Good morning, all of you. My name is Ram Koju, and I'm from the Nepal Insurance Authority.
Good morning, all of you. I'm Purna Thapa. I'm working as a Deputy Director of Insurance Authority.
Good morning, ladies and gentlemen. I am Santosh Karki, Chartered Accountant. I have been working in Nepal Insurance Authority since last 9 years, and I have been working in on-site supervision section. Thank you.
Good morning, everybody. I'm Dinesh Kumar Lal, Director of Nepal Insurance Authority. Thank you.
Good morning. My name is Drupati Milsina, Deputy Director, Nepal Insurance Authority. Thank you.
Hi, good morning, everyone. My name is Pascal Lam. I'm from the Access to Insurance Initiative. We're one of the co-organizers of this event. It's a pleasure to be here and looking forward to meeting you all.
Good morning, everybody. I'm Ronnie Limbaga, also from the Access to Insurance Initiative, and it's a pleasure to be here and to be working with you all. Thank you.
Thank you. I'm Manuela Zweimüller from the International Association of Insurance Supervisors. So we are also one of the co-hosts of this fantastic conference and event. I am the head of assessment and implementation at the IIS, and I'm really delighted to be here and look forward to our discussions.
Hi, namaste. My name is Raju Raman Paudel, Executive Director in Nepal Insurance Authority.
Hi, good morning to every one of you. My name is K. Subramaniam. I'm an actuary. I'm a consultant to Nepal Insurance Authority. Thank you.
Namaskar and good morning. I am Man Bahadur Aryal, board member of Nepal Insurance Authority and Joint Secretary of the Ministry of Law and Justice. Thank you.
Namaste, good morning all. I am Ritesh Kumar Sakya, Joint Secretary, Ministry of Finance, currently serving as a board member of Insurance Authority.
Namaste to all. I am Surya Shilwal, Chairman of NIA.
Namaste and a warm good morning to all of you present today. I am Puspa Kuwar from Nepal Insurance Authority, working as Deputy Director. Thank you.
Good morning, everyone. I'm Pujan Dungel from Nepal Insurance Authority.
Hi, good morning. I'm Catherine Mitsiko. I'm from the Asian Development Bank. I'm from the Sustainable Development and Climate Change Department. So we're here as the co-organizer of that event.
Good morning, everyone. I'm Maria Cristina Pascual. I'm working with ADB as consultant for project implementation.
Namaste and very good morning to all. I am Susil Subedi, Nepal Insurance Authority. Thank you.
Good morning, ladies and gentlemen. My name is Ali from the Monetary Authority of Macau. Nice to meet you.
Hello, good morning, everyone. First, thank you for the Nepal Insurance Authority, the invitation for this event. My name is Lam Kang from the Monetary Authority of Macau, work in life insurance sector. Thank you.
Hi everyone, my name is Alvina. I'm also from the Monetary Authority of Macau. I'm working in the policy team.
Good morning everyone. My name is Diki Somorinzin. I'm currently working at the Royal Monetary Authority of Bhutan under the Department of Financial Regulations and Supervision. Thank you.
Hello, good morning everyone. My name is Ugin Choden. I work for the Royal Monetary Authority of Bhutan, regulatory body for insurance sector in Bhutan. I also work as the director in the Department of Financial Regulation and Supervision. Yeah, thank you.
Good morning everyone. I am Madhusudan. I am representing India here. I work with Insurance Regulatory and Development Authority of India. I am working as Deputy General Manager. Thanks.
Namaste and good morning to all. I am Jaggali Meena Kumari from Insurance Regulatory Development Authority of India. I know I have met you through online, but only now I could recognize. I handle life functions currently and also involve into risk-based capital, risk-based supervisory framework and insurance for all context. So I'm looking forward in this program to see how things would fold on. Thank you.
Namaste, good morning everyone. My name is Warawe Cholasinu. I'm the Executive Director of AIT Extension from the Asian Institute of Technologies from Thailand. We are working closely with the regulator in Thailand and also in Bangladesh, and we are working with the Thai Reinsurance and other agencies in Thailand to promote the sustainable financial service sector in the region. Thank you. Nice to meet you all.
Namaste, good morning everyone. First and foremost, I would like to thank Nepal Insurance Authority and Asian Development Bank for inviting us to this incredible event. My name is Yuli. I representing Indonesia Financial Services Authority. I work in Directorate of NBFI Development, Special in Insurance. Pleased to meet you all.
Namaste, good morning everyone. Pleased to be here at Asian Insurance Meet in the beautiful city of Kathmandu, Nepal. Thank you for inviting us. I'm Sabil from Indonesian Financial Services Authority, supervisor at Department of Insurance Supervision, particularly in the field of insurance broker. Okay, thank you. Pleased to meet you all.
Good
morning, everyone. It's such a great honor and privilege to be a part of the Asian Insurance Meet today. And my name is Yuran Tep. I'm from the Insurance Regulator of Cambodia. And currently, I'm working as a Deputy Head of Life Insurance Supervision Division in the Supervision Department. Thank you.
A very good morning, everyone. Let me begin with extending my gratitude toward the Nepal Insurance Authority, the ADB, and other conference partners for organizing this amazing event. My name is Nguyen Srenak. I'm from the Insurance Regulator of Cambodia. I've involved in policy development, including the strategic development plan, the institutional development plan, and also the rolling plan. And today I'm very delighted to be here with everyone. Thank you.
Namaste, good morning. My name is Praksha Mathema. I'm a consulting actuary for Nepal Insurance Authority.
Good morning, everyone. My name is Akram Salah. I'm from Central Bank of Jordan Insurance Supervision Department. I'm head of inspectors in insurance supervision providers. Thank you all.
Good morning, all. I'm Rafat Hamad from Central Bank of Jordan, insurance expert. It was so delighted to be here in such insightful event. Thank you.
Good morning, all. My name is Mahmoud Baniata. I'm from Jordan. I work in Central Bank of Jordan, Insurance Supervision Department. Thank you all.
Namaste and good morning to everyone. My name is Poonam Gewali, Deputy Director from Nepal Insurance Authority. Thank you.
Namaskar. Good morning. My name is Kamal Regmi, Director, Insurance Authority of Nepal.
Namaste, good morning. I'm Santosh Chhetri, representing Asia Insurance Review, the media partner. Thank you.
Good morning, Namaste. My name is Thomas Kurian. I work as a digital finance specialist with the United Nations Capital Development Fund. Happy to be part of this event and looking forward to some insightful discussions. Thank you.
Good morning and Namaste, ladies and gentlemen. I am representing Deposit and Credit Guarantee Fund Nepal as Risk Management Officer. Thank you.
Namaste. A very warm good morning to you all. I am Rajendra Marjan, Nepal Insurance Authority. I am working as a Deputy Director. Thank you.
Namaskar and good morning to everybody. I am Jyoti Prakash Pandey. I am still working with Insurance Regulatory Authority of Nepal in on-site inspection department. Thank you.
Good morning, and Aiboan. I'm from Sri Lanka. I'm Maliti Ambalangodage, representing the Insurance Regulatory Commission of Sri Lanka. Thank you.
Good morning and namaste, everyone. I'm Lydia Amira Jazali from Central Bank of Malaysia. I work at the Actual Division of the Insurance Supervision Department.
Hello, everyone. Good morning. It's a pleasure to be here in Nepal, Kathmandu. My name is, first of all, I would like to thank the event organizers and planners for inviting and having us here. My name is Musab Habib, and I'm from Maldives Monetary Authority, Central Bank of Maldives, and I'm working in licensing and regulation. Thank you.
Good morning, everyone. My name is Jailam Mujtaba, and I'm currently working as the head of the Insurance Supervision Department in the Maldives Monetary Authority. I'm honored to be here, and I look forward to many productive discussions during the next 3 days. Thank you.
Hi, Boban, and good morning. I am Satish from Insurance Regulatory Commission of Sri Lanka. I am working as Director of Finance and Admin.
Hello, good morning. This is Samri Abu Mahmood. I'm representing Insurance Development and Regulatory Authority of Bangladesh. I would like to convey my gratitude and thanks to the Nepal Insurance Authority as well as the conference partners like IIS, ADB, and AII for arranging such a wonderful event to learn, to expose something new and to enhance the knowledge in the area of emerging risks. So thank you very much for inviting us. Thank you.
Assalamu alaikum. I am Mohammad Murshidul Muslim from Insurance Development and Regulatory Authority. I'm working over there as an assistant director. Thank you very much.
Good morning, I'm Pim Sri. I'm senior specialist from the Office of Insurance Commission, Thailand.
Good morning, everyone. I'm from OIC, Thailand, Office of Insurance Commission. My name is Chansak Petisilikun. I'm a director of Capital and Solvency Supervision.
Namaste to all. My name is Kesab Dal from Nepal Insurance Authority.
Namaste and good morning to all of you. I'm Kusum Sarma from Nepal Insurance Authority.
Namaste and good morning. I'm Kundan Sampota from Nepal Insurance Authority.
Hello everybody. Namaskar. I'm Sambaraj Lamichane, Insurance Authority of Nepal. Thank you.
Namaste, I'm Jamuna Aryal from Insurance Authority.
Namaste and good morning to everyone. My name is Birod Bhatta, Deputy Director, Nepal Insurance Authority. Thank you.
Namaste and good morning. I'm Shraddha Shrestha from Nepal Insurance Authority.
Namaste and good morning to everyone. I am Preeti Dev from Nepal Insurance Authority. Thank you.
Namaste and good morning everyone. I am Nirmala Malla from Nepal Insurance Authority. Thank you.
Namaste and good morning everyone. I am Nisa Gimire, Deputy Director, Nepal Insurance Authority. Thank you.
Namaste, good morning and a very warm welcome to you all. I am Vishal Tredal, Assistant Director at Nepal Insurance Authority, and looking forward to having great sessions ahead. Thank you.
Namaste and good morning. I'm Bunu Gimire from Nepal Insurance Authority, currently working as Assistant Director Legal. Thank you.
Namaste everyone. I'm Lok Prasad Kafle from Nepal Insurance Authority.
Namaste and warm welcome to everyone. It's me, Krishna Baral from Deposit and Credit Guarantee Fund, Nepal. It's a semi-regulatory organization who regulate bank and financial institutions of Nepal and take huge risks of BFIS. So we are here.
Namaste, good morning everyone. I am Vinod Kumar Pokhrel, working in Nepal Insurance Authority as a Deputy Director. Thank you.
Good morning everyone. I am Padam Prasad Sodari, working in Nepal Insurance Authority. Thank you.
Namaste and good morning everyone. My name is Nirmal Adhikari from Nepal Insurance Authority.
Namaste and good morning. I'm Gopal Pangani, working in Nepal Insurance Authority in Upside Supervision Department. Thank you.
Namaste and good morning. I am Birod Wagle from Nepal Insurance Authority.
Namaste and good morning. I am Hriday Pandit from Nepal Insurance Authority. I look forward to hear the great discussions over here. Thank you so much.
Namaste, good morning. This is Modna Dhakal. I'm a journalist. I'm here as a reporter of the event. Thank you.
Namaste and good morning to all. I am Anjana Sharma from Nepal Insurance Authority.
Thank you very much. Thank you all. I hope we were able to cover everyone. 15 minutes and we got to know everyone in this room. Love the diversity here. So many people representing so many different countries, nations, and organizations. This only goes to show that the discussion we're going to have is definitely going to bring in different diverse experience from their own different organization and countries as well. And we hope that with this short introduction, you were able to know each other better as well. And in these 3 days, you will be able to make some new introductions and acquaintances acquaintances and maybe friends by the end of this summit as well. Once again, thank you all for giving us your precious time and being here as a part of the Asian Insurance Meet 2023. Ladies and gentlemen, we're now going to have an overview of Nepalese insurance industry and regulatory framework, for which I'd like to invite Ms. Pujan Dungel on stage. She's the director of Nepal Insurance Authority. She has over 16 years of experience in Nepal Insurance Authority and has worked in various capacities and currently heads the Insurance Policy and Human Resource Department. Can we please put our hands together for Ms. Pujan Dungel?
Thank you so much, Sadiksha ji. Respected Chairman of Nepal Insurance Authority, respected board members of Nepal Insurance Authority, respected Executive Director, high-level representatives from IIS, A2II, and ADV, and the co-host of our event, representatives from regulators of different countries, directors of Nepal Insurance Authority, consultant actuaries of Nepal Insurance Authority, all other colleagues from Nepal Insurance Authority. Warm welcome from Nepal. Today will be one of the most memorable days in the history of Nepal Insurance Authority, since we are going to host the meeting with representatives from esteemed organizations like IIS, ADB, and the regulators from different countries. I'm so happy for the opportunity to share about the current situation of the insurance market in Nepal and what we are doing as a regulator in Nepal. My presentation will be very brief, and I'll be more than happy to hear from you as well regarding your experiences and challenges that you are facing in your jurisdiction. I'm super excited to exchange information and knowledge with the experts in various areas. We believe that although we represent from different countries, we all try to adopt the best practices and core principles for prudential supervision. It gives me a great pleasure to talk about the current scenario of Nepalese insurance market and the opportunities and challenges we are facing, so that we together can find out the solution of the common problems that most of the jurisdictions are facing. In today's presentation, I'll basically be talking about the current insurance market, the opportunities that we have, and the challenges that we are facing as a regulator. We'll also talk about how the government is supporting us in various aspects. I know all of you know about Nepal Insurance Authority, but I would like to highlight briefly about the Nepal Insurance Authority. Nepal Insurance Authority is the regulatory authority of insurance sector. You all know that. And I think most of you had heard about Insurance Board or Bima Samiti before, but you might not have heard about Nepal Insurance Authority before. In fact, Nepal Insurance Authority has been given the name by our new act, Insurance Act 2022, which has been enacted recently. And our previous act, Insurance Act 1992, was repealed, transforming Insurance Board into Nepal Insurance Authority. Nepal Insurance Authority is a regulatory agency established to systematize, regularize, and develop the insurance market in Nepal. The major roles and duties of Nepal Insurance Authorities are to act as the advisor of the government of Nepal regarding the insurance, formulate national insurance policy, grant approval of the license for the establishment of the insurance companies and intermediaries. Similarly, our function is also to formulate the necessary bylaws, directives, guidelines, and orders, carry out regulation, inspection, and supervision of the insurance business. And our main duty is to settle the disputes concerning the various parties of the insurance and decide on the complaints filed by the insureds against insurers. Basically, Nepal Insurance Authority is a quasi-judiciary authority and the first court to file the complaint if the insured is not satisfied with the claim settlement and other issues. And I forgot to mention the major role. Our most important role is the protection of the policyholders' interests. Similarly, we are also here to coordinate with the foreign insurance regulatory bodies and international organizations and obtain their membership as well. This role has been assigned by our new act. It was not in our previous act. Regarding the formation of the board, our board is composed of a person nominated or designated by the government as a chairperson, who is the full-time chairman of Nepal Insurance Authority, who just came before you for the keynote address. And our another board member is Joint Secretary of Ministry of Law, Justice, and Parliamentary Affairs. Similarly, our another member is from Joint Secretary of Ministry of Finance. Likewise, a person nominated by the government from among the persons having the special knowledge in life insurance business is one of our another member. Similarly, a person nominated by the Nepal government from among the persons having the special knowledge in non-life insurance business is another board member of Nepal Insurance Authority. And I would like to mention that this new act has mandated that one of the board member should be woman, which is one of the inclusive nature of our new act. Vision, mission, and core values. Our vision, the vision of Nepal Insurance Authority, is to transform Nepal Insurance Authority into a highly prestigious and leading institution of Nepal. Similarly, our mission is to be recognized as a very professional and well-empowered insurance regulator through continuous learning, competence, and integrity. And our core values are integrity, transparency, accountability, team spirit, service, fairness, and innovation. Regarding the number of insurers, our chairman sir has already mentioned in his keynote address, but I'd also like to briefly mention. We have 15 life insurers, 14 non-life insurers, 2 reinsurers, and 4 micro-insurance companies. And we have 12 brokers who were recently licensed. We didn't have brokers, and they were licensed only in the previous year. Similarly, we have 194,216 individual agents, 1,061 surveyors, and 117 institutional agents. So these are the intermediaries in our sector. Regarding the insurance paid-up capital, the regulatory requirement of the paid-up capital is 38 million for life insurers, 19 million for non-life insurers, and 5.6 million for the non-life insurers. This is in dollar. And the growth in paid-up capital is 12.81% for the life insurers. Similarly, 14.82% in case of non-life insurance companies. So this is 1-year growth in paid-up capital of our sector. Regarding the employment, in 2021, 10,882 people were directly employed in insurance sector. Similarly, in 2022, 12,301 people were directly employed in insurance sector, and the growth in direct employment is 10.56%. And I would like to mention that this number doesn't include the insurance agents and surveyors. These are only the employees of our insurance companies and reinsurance companies. Now, I'd like to state some highlights on gross premium collection. In fiscal year 21-22, gross premium collection in life insurance sector was 138.64 billion. Similarly, in non-life insurance sector, it was 39.17 billion. Hence, the total premium collection in fiscal year 21-22 was 177.81 billion. But this figure is in NRS. The growth in gross premium collection is 16.4% from previous year. So this is the overall scenario of the premium collection in our jurisdiction. And regarding the contribution to GDP, the contribution to GDP is 3.67%, and out of which 2.86% is from life insurance and 0.81% in some products like motor insurance, property insurance. They are all tariff-based in Nepal. We haven't detariffed them yet. And we are facing the challenge that insurance companies are cutting the tariff in those products. So then that is one of the challenge. Similarly, lack of innovative product and need-based product is another challenge, because the companies, all of them are selling the conventional type of product, and they do not do adequate research while developing the product. And that may be due to the lack of technical expertise as well, but that is another challenge that we are facing as a regulator. And building resilience towards emerging risks. And this is the theme of our event as well. So this is another challenge. And implementing risk-based approaches. Although we have initiated to adopt the risk-based approaches by designing the framework of risk-based capital and solvency, but we are not able to implement the risk-based approaches in complete way. So that is one of the challenges. Similarly, introducing advanced technologies and digitization is another challenge and our priority as well. And regarding opportunities, now we have increased scope of NIA, because due to the enactment of the new act has given us more power and responsibility as well. So we have increased scope, and that is the major opportunity for us. And we have established the provincial offices in 6 provinces of Nepal. So now, Nepal Bima Insurance Authority is present in 7 places of Nepal. So that is one of the opportunity for us. And we are getting lots of government support in this recent years. And insurance has been the priority of the government as well. So that is one of the opportunity. And although there is less awareness, but the level of awareness is increasing day by day, and people are more aware about the insurance, and most people are asking about the insurance products and all, and they want to do the insurance by themselves. So that is one of the opportunity for the regulator as well as the insurance sector as a whole. And international cooperation. In these few years, we have developed international cooperations with various, international organizations like World Bank, ADB, A2II, and that is one of the opportunities for us, because we can adopt the international best practices, and we can gain knowledge from their expertise as well. And this event is one of the result of the international cooperation, because the prestigious IAIS, ADB, A2II, and other organizations are also present in our event. The major initiatives, we have, Nepal Insurance Authority has started some initiatives to develop the insurance market and make it more systematic and regulated. Actually, the first thing we are doing is we are drafting a regulation pursuant to our new Act 2022, and we have already submitted the draft to Ministry of Finance, and hopefully our new regulation is come very soon. Similarly, we have formulated second strategic plan for the period of 2023 to 27, and I have already mentioned about provincial offices. Similarly, Nepal Insurance Authority is promoting merger and acquisitions, and as our chairman sir just said, our company, the number of companies has decreased from 41 to 31. That is the result of merger and acquisition. Similarly, due to merger and acquisition, we believe that we can attain financial governance and reduce the unhealthy competition in the market as well. And another initiative we are having is we have formulated the risk-based capital framework. Although it is not implemented completely, but we are planning to implement the risk-based capital and capital framework in transitional basis. So. And another initiative we are doing is licensing of the micro-insurance companies, which are dedicated to do only micro-insurance business. So we have now 4 micro-insurers as well, and they will go to the local people and poor people and vulnerable people. And we believe that our insurance penetration will increase more in coming days. And we are in the process of establishing Insurance Information Center, Insurance College, and Insurance Development Fund and Policyholder Fund as well. And these things has been mentioned in our new act as well. And one thing, we have started digital registration and renewal of the license of the agent and surveyor from this year. So this work has been very easy due to digitization. And I already mentioned, I don't want to talk too much about it. We are doing lots of promotional activities, and we are having coordination with the provincial governments and local levels in order to, promote the insurance awareness. Similarly, we are having insurance education in schools and colleges. And we are also, we have also produced lots of TV programs, radio programs, and animated video in order to promote the insurance awareness. Some of the initiatives that government has regarding the insurance is we have compulsory third-party insurance in Nepal. Similarly, we have foreign employment insurance policies also compulsory in Nepal. And in the fiscal policy of 2018, the government had mandated or given us the target that microinsurance would be 10% of the total business of the insurer. So due to that, the microinsurance is flourishing day by day. Similarly, in fiscal policy of 21-22, government set the target that 33% of the insurance coverage should be there in our insurance industry. So NIA as well as industry are working together aggressively in order to increase the insurance penetration. And as a result of that, we have achieved our goal and we have reached 44% by today. And regarding the subsidy, I think this is important to mention. The government has, the government is giving 80% premium subsidy in agriculture insurance premium. I think my time is, well, now I don't want to take too much time. These are some of the, priorities set by the government in our budget of 2023-24. In our budget, it has been mentioned that there will be the strengthening of the regulation and supervision of the insurance sector. Similarly, there will be establishment of the branches of the insurance companies in various local levels and provinces. Similarly, there will be the insurance literacy program in rural and remote areas. So these all things have been mentioned in our current budget, and we are so excited to implement all these points. And the way forward, I don't want to take too much time. Now, Nepal Insurance Authority is working towards enhancing the regulatory capacity. We are just trying to build the highly skilled human resources in the Nepal Insurance Authority as well as in the industry. Similarly, we want to promote the risk-based supervision, and we are in the process of implementing the risk-based supervision framework, which we have already developed. Similarly, we want to strengthen our regulatory framework as well. And we want to review and update our regulatory framework to align with the international best practices and emerging trends in insurance industry. And we are also extending cooperation and coordination with various regulators inside our country, like SEBON and NRB, so that we can address the regulatory overlap and ensure the strong financial regulation in our country. And we are also collaborating with the international bodies, which I had already mentioned. I don't want to repeat. And our main focus is to adopt the InsurTech and RegTech in insurance sector. So this is the end of my presentation. So hopefully I have tried to cover some of the major scenario of the insurance sector in Nepal. Thanks for listening patiently. Thank you very much. Thank you.
Thank you, Ms. Poojan, for this insightful presentation that you gave us on an overview of the insurance industry in Nepal. I'm sure, like Ms. Poojan mentioned, many of you related to the challenges and opportunities in this particular sector as well. Moving forward, we would now like to have our first session with the topic, Implementing of Risk-Based Solvency. I would now like to invite on stage Ms. Manuela Zweimüller, Head of Implementation, International Association of Insurance. She also has a breadth of experience in insurance, pension, and consumer protection policy development and supervision. She's been a part of the industry, insurance industry of over 15 years, and we are extremely delighted that Ms. Manuela was able to come here, and would now like to hand over the floor to her. Ladies and gentlemen, Ms. Manuela.
So, thank you so much. So, esteemed chairman, esteemed members of the board of the Nepalese Insurance Authority, esteemed executive director, and dear colleagues from the Nepalese authorities who are here so numerously, and we are so happy to meet you all. Thank you so much for the very warm welcome, and Kathmandu is really a fantastic city in a fantastic location. And this conference is just amazing. So a big thank you to the organizing team at the Nepalese Insurance Authority. It is impressive what we have just heard, what you have been doing recently, but also you are existing since '69, I have seen on one of the slides. So that is a very long time, and it was really good to see on the slides also, many familiarities that we are also doing at the IIS. So several of our strategic themes, such as cyber, such as innovation, microinsurance, financial inclusion, climate, all these are topics that we are dealing with at the IIS together with our members. Dear participants, it is really great to have you here, and I'm expecting a vivid exchange, and don't be shy, ask questions. And I think the entire event is really living from exchange and learning from each other. The motto of the conference fits very, very well, so building resilience against emerging risks. And that is what we are trying to achieve with the implementation of a risk-based solvency regime. This is a twofold presentation, so I will be first, give you a bit of an overview of what we are doing at the IIS, and it's more about the how and how we are trying to help our members. And then our implementation partner, the A2I, will focus on risk-based capital. With this, I will go to the next slide. The idea is to give you a bit of an overview of our risk-based implementation forum. So this is the main platform where we are exchanging on risk-based solvency and risk-based solvency regimes and risk-based supervision. Who are the members? And I think I can definitely invite you. There are so many regulators and supervisors in the room from all over Asia, and I will definitely invite you to join the forum. And then some examples of what we are discussing, and this is what was already said, practices. You want to learn from others, you want to see what are best practices and what are examples of what others are doing. So this is what we are doing in the forum. Then development of a guidance paper, I will focus on this as well. And as a survey on plans, we did a survey who has already implemented an RBS from our members, who not, and where the colleagues are in their journey. And last but not least, what will be the next steps and further activities. So that I will try to cover in the next 45 minutes, maybe a little bit shorter. I already said we have a forum, the RBSIF, so we love abbreviations, and also a drafting group. And the drafting group is drafting the guidance paper. This is giving you a bit of an overview about the process so far. So we have started last year in establishing the mandate of the forum and also to approve it and to establish it. Then, in September, we had our first kickoff meeting last year, and we established also the drafting group and the draft outline already of the guidance paper. And the guidance paper is supposed to help with the how to transfer to a risk-based solvency regime. So it's more about the journey, it's more about the project management de facto, and it's less about the technical details. So that will follow, and here we also have, in particular on capital, also the A2I paper, and of course, all our insurance core principles. Then in November, we have our parent committee, that is the Implementation and Assessment Committee, and I'm responsible for this committee as the head of implementation at the IIS, and we got the outline approved. We also got a chair and a drafting group lead approved, and the allocation of the chapter of the different drafting group members. And I would like to mention that this work is carried out together with the IMF. This is also why Peter Windsor from the IMF is the lead of the drafting group, and Jooste Steinberg from the Prudential Authority in South Africa is chairing the forum. And they have just, not just, I think during the last 10 years, they have implemented also risk-based solvency in South Africa. So he is really also quite knowledgeable about the challenges that are faced with such a transformation process. Since the beginning of this year, we are very vividly working in moving the guidance paper forward. We did stock take, so what have others done, what can we learn from these examples, and we are currently also collecting case studies. And we already have 10 members who have committed to provide a case study, and the first 2 have already arrived. Recently, one is from Zimbabwe, and our colleague from Zimbabwe, I think, will also most probably appear virtually on the screen today, and from Brazil. And the other ones are coming in over time. Then we also have joint meetings with the so-called Supervisory Forum, because the Supervisory Forum is supposed to exchange on supervisory practices. So that gives you a little bit of an idea of the structure, and you can see it's an evolution. It's not a revolution, it's an evolution, and it really also takes time to establish these things, to get them up and running, and then now we are really in a kind of a cruising speed with the work being done, in particular on the guidance. The next paper shows you a little bit the mandate, and what is important on the mandate is with this forum, we really want to help our members to advance their observance of the IIS supervisory material, that is in particular the insurance core principles, and with this also to strengthen our members' supervisory frameworks by fostering the transition towards risk-based solvency. And risk-based solvency regimes are much better prepared and are much better suited to deal with emerging risks. And I said already, we have 2 legs. One leg is the drafting group that takes care of the guidance paper, and the other leg is the forum itself. The forum holds meetings virtually once a year in person, and it's on a quarterly basis. So we strive to have 4 forum meetings a year, 3 of them virtually, 1 in person. So on the next slide, this is a slide I really wanted to show because, yes, regulatory framework is one thing, but then you have to supervise it, so that really goes together, and once you have implemented the regulation and you have legislated it, then you also need to transform your supervisory approach also into a risk-based one. In our guidance paper at the moment, we are focusing on the red and on the green, and we will hopefully also do something on risk-based supervision from 2024 onwards, because we also see that this kind of practical approach, how do I now supervise an ORSA? How do I now supervise a risk management system? How do I supervise risk-based capital? And what kind of measures can I take if such regulatory requirements are breached? We also allocated the insurance core principles to these different activities, and in the end, once we will be done with all this work, and it will take a while, all the insurance core principles will also have been covered. This is the membership. It's very diverse. You can see that we have 7 IIS regions covered, but you will also realize that from Asia, I think we could still need some members in the RBSIF, and I cordially invite you to join us. So just approach me or send an email to the Secretariat if you are interested. And I will now also show you what is the benefit in joining the forum. I have already said that the forum holds quarterly sessions, but the drafting group is having virtual meetings every month. And they develop the text for the guidance paper. And the guidance paper will have practical aspects of implementing a risk-based solvency regime. And that will cover all the 3 pillars. It will cover the quantitative, the qualitative, and the disclosure components of a risk-based solvency regime. And also, these procedural aspects, how to manage the transition. And as I said, it's a transformational process, and you need to have a really good project management, and it's a journey. It will not happen overnight. You need to be patient, and you also need to take sufficient time to get it implemented. These are now examples. What we are discussing in the forum and how forum members are benefiting from each other. We usually have tour de tables in the forum, and then different members, but also guests. And by the way, you can also, to try out the forum, you can also join as a guest if you wish and if you are curious. And here, Peru, Switzerland, and also Bermuda have provided such case studies in a tour de table, how they managed to transition to a risk-based solvency regime and what were obstacles, what did they do? I just want to mention from Peru, because that was really very interesting. They wanted to have a cross-cutting regulation. So that means not only for insurance, but also for banking and securities. And for example, for the solvency requirements for insurance, they took elements from the banking requirements on capital. So that's not the usual thing that we are doing, but it was very impressive, and they wanted really to have it aligned across the entire Peruvian market. What they also put a lot of emphasis on was the involvement of the industry. So they developed it also together with the industry, because in the end, it will be the insurers and reinsurers in your market who have to follow the rules. So you need to involve them and to get also their buy-in. And what the Peruvian colleague also said, the institutional transformation was also very, very important, and in particular the buy-in from the top, from the management. Otherwise, it will not work. You will need resources, you will need time, you will need to allocate people to do this work. Then Switzerland, that was also a long journey, and they wanted, so we were also asking them, why did you wish to implement RBS? I already said, okay, it will help you to better deal with emerging risks if you have a risk-based regime. Switzerland also said they wanted to follow international standards, such as the standards of the IIS, the Insurance Core Principles. But they also did comparisons with other RBS regimes in the market, such as Solvency II, for example, which, by the way, at the moment then got delayed for a couple of years in legislating it. Field testing, said our Swiss colleagues, was very, very important, so the so-called quizzes, so the quantitative impact studies. So if you have certain requirements, in particular then on the Pillar 1, on the capital, what will this mean for industry? Will they be some that may need to recapitalize? Is it the right environment, economic environment to recapitalize? What will happen if the majority of the market will have to capitalize? So these quizzes, the field testing, helps to calibrate the Pillar 1 in particular. And then, last but not least, Bermuda. They put a lot of focus on the planning and the project management. So they said that that was really key to get the project advancing, and supervisory capacity building. Because they also said, okay, and this is also what you heard in the presentation on the Nepalese insurance market, technical expertise is really also needed and needs to be developed within the authority, and often also in the market and as part of the industry. So just to give you a little bit of a flavor of what we are doing in the forum and what are we discussing. It's very, very practical and hands-on, the discussions. Now the guidance. I hope you are now curious what we are going to produce. So the guidance is divided in 6 chapters, and it is, as I said, it's more about the how. How do we transition into a risk-based solvency regime? So this is why in chapter 2 you see what is a risk-based solvency regime and why does it matter. Dealing better with emerging risk, providing more resilience to the insurers and the market are some of the reasons. Then the preconditions to transition to RBS. The market needs to be mature enough to do so. It doesn't make any sense if you are really at the beginning of a market development in your country and then you already want to implement an RBS. That may be too early. So you first need to develop and mature the market, and then you can think about a kind of a stepwise implementation. Then practical aspects, as I just said, project management is very important. Buy-in from the top is very important. Also to think in years, not in months. That will be all covered in that chapter. Then, of course, technical aspects, as I said, of course, the quantitative and the qualitative aspects are in there, but very, very short. We are not describing in this paper a fully fledged technical paper on capital requirements. That we would not do here. And then the case studies. I think the case studies will really be the heart of the paper. And if you wish to provide a case study here and to share your experience with others, please let me know. We are very happy to get additional case studies on board. And that is also on the next slide. In the middle, it's really the case studies. As I said, they are the heart and the core of the guidance paper. Then I also told you that we did a survey of our members, and we were asking them, has your jurisdiction already implemented a risk-based solvency regime? And what do you think would be the portion who said yes? Would it be 10%? Would it be 20%? 50%? Close to 100? What's your guess? Who has, or how many jurisdictions of the IIS membership have already implemented a risk-based regime? And with implemented, we meant fully implemented. Yeah, it's fully fledged, it's working, it's there, and it's already supervised. What's your guess? Pardon? 10%? 10%? Less than 10%? 20? Yeah? Yes? It's getting close. It was around 1/3. Yeah? Around 1/3, 35%, have already implemented it, and the IIS has 200 members, 200 jurisdictions as members. There are 50 states of the US, and of course many, many European supervisors, all the member states of the European Union, for example, and also some additional countries from Eastern Europe that also want to become accession countries. So, and Solvency II is implemented there. So this explains it, but also, for example, in Japan, you have a risk-based regime and so on, and also in a few jurisdictions in Latin America. So this explains the 1/3, but the majority, by far more than the majority, is on its way. And this is why we really put on this slide. So some are planning to introduce. Some are in the process of drafting a new framework. Others are preparing to start already the quizzes, yeah, the field tests. Then we have those who have finalized the quizzes and now want to legislate the regime. Or some are already at the end of the journey and it will be implemented still this year. And some also, but that was really the exception, they said they have implemented the regime, but now they are in a monitoring phase. I find this very interesting because it also tells you, yeah, once you have implemented, that doesn't mean that it's all over. Yeah, you then will monitor, you then will adapt over time. So it's a living thing to transition to risk-based supervision. And I think you will also see on this slide what you have seen on previous slides. So challenges, yeah, what are challenges? Challenges are, for example, the calibration for the Pillar 1, for the risk-based capital. It's the resources in the industry, it's the resources also in the supervisor. IFRS 17 was also mentioned because there are several jurisdictions around the world that have to mandatory implement IFRS 17, and that of course also has an impact on your solvency regime. IT, we have heard, and data-related issues, that is really a big challenge, because for the calibration you really need good data and sufficient data. Risk culture is underestimated, but very, very important. And there are some jurisdictions who don't start with Pillar 1, with the quantitative part, but they start with Pillar 2, with the risk management part. Because only once you have fledged out the requirements for risk management, risk embedding a good risk culture in a company, that is really providing the foundation for then also moving to a risk-based solvency regime. If you have this, you need this risk culture in the authority. You need to shift from a more compliance-based supervision to a risk-based supervision, which is different because then you will also not supervise the market equally. You will do it risk-based. That means those who pose more risk in the market will have closer supervision compared to others, for example, or then more simplified supervision. So there is also a proportionate approach in the supervision then itself. Then stakeholder management, yes, you need the buy-in, from internal to the market, to the industry, to government and ministries, That is very, very important. If there is one player that doesn't want or doesn't like what you are doing here, it will be very, very difficult, to get an RBS implemented and functioning then. And the lack of technical capability, and this is where the capacity building comes in, is also what we have seen really also on the slides of Bujan. The areas for guidance, stakeholder engagement, that will be dealt with in the forum. As well, of course, capacity building, I don't need to repeat it. ORSA was very interesting. So we have in Pillar 2, we also have an ICP 16 on enterprise risk management. Here also the own risk and solvency assessment is included there. And ORSA is a mixture of quantitative projections in the future, capture all the material risks, how would they evolve in the future, will there be new risks on the horizon, and also a kind of a qualitative part to describe risks that you cannot yet quantitatively capture, for example. So ORSA is very, very interesting, and it definitely evolves over time. I have seen this. I was working with EIOPA, the European Insurance and Occupational Pensions Authority, for 8 years. I was responsible for policy and Solvency II implementation. And the first ORSAs that we looked at were really, a bit astonishing. You could see a couple of pages to 100 pages, but even in 100 pages, you could see a lot of text, but not really a lot of figures and, the materiality that you would have expected from an ORSA. So you need several cycles, and we also know this, for example, from Hong Kong Insurance Authority. They, I think, are now in the second or third cycle to implement an ORSA, and you need to move also together forward. Economic impact assessment, yes, that is definitely important. So how that goes back also to the quizzes, but then also not only how individual insurers are affected, but how the entire market would be infected. Role of external auditors, also the auditors need to move from a more compliance-based approach to a risk-based approach, which is different. And then there are a lot of other practical considerations that you will definitely come across once you have started the exercise. And at this moment, I also wanted to bring something which is not on the slide, but which I try to get here. Yes. In November at the IIS annual conference in Santiago de Chile, we had also a roundtable on risk-based solvency regimes and how to implement them and how to transition to them. That was hosted together by the IMF and the IIS. We have uploaded the recording into the A2I Connect, so the Access to Insurance Connect. But what was really important were the key takeaways from these presentations. And they have done 3 case studies in 3 different jurisdictions, including one in Sub-Saharan Africa and others somewhere else in the world. And they extracted the essence, the IMF extracted the essence of what needs to be done. It's really, be clear on reasons and objectives for the change. So why are you doing this? And I also said already before, the market needs to be mature enough, so there are preconditions to move to RBS. Then the buy-in we have already talked about, that was also ranking really very high on the key takeaways. And I have not yet mentioned this, the legislative changes. Also this may take a while. So I myself, definitely know for Solvency II, it took years in the end until the European Parliament legislated and with a lot of steps in between. And I also have recent example from Switzerland where they want to change something in the insurance law, and it, I think, now takes them up to 5 years to get it through. So also legislation itself can take a lot. Then they have an average duration of these RBS projects of 5 to 10 years, and it needs careful planning and resource allocation. And it needs to be formalized, within the authority, within the market. You will need, full-time resources to the project, so it cannot be done just on top of your regular work as a supervisor. You need a really good and detailed project plan with milestones and timelines, and you really need to report regularly to the board where you are in the journey. And what I found very, very good was no need to start from scratch. Why? Learn from existing frameworks. Do your own comparison. Not everything may fit your needs or your market, but you could see interesting aspects that could be beneficial for your ideas to move to risk-based supervision. And select those that work for your market. So that one is my favorite takeaway. And then learn from others that went down the road. This is what we are doing in the forum. Very important as well, document. You really need to document what you're doing. That is often overlooked, and then you try to find out, okay, what were the results of the quizzes 2 years ago and things like this. So documentation is very, very important, because the RBS at the end of the journey will look very much different from the RBS at the beginning of the journey. And you really would need to have this track record. Change management is also important. That is usually underestimated. So there are resistances in the authority, in the market, in the ministries, everywhere to overcome. So change management is part of the project management. IT solutions, if I think about reporting to the supervisor, that is where the supervisors will be challenged to install something that helps for the reporting. We have seen really a huge acceleration in these kind of IT, not only skills, but also IT projects during COVID, because a lot of things had to happen electronically. And that was also beneficial for reporting to the supervisor in installing an IT format and an IT database, so that data can be easily reported. And then, last but not least, continuous communication with the industry, pre, during, and post. With this, I want really to leave this one, and we will share with you where you can find this. You have to register first to A2I Connect. And with this, I went back to the beginning. Voila. Yes. Further activities, I will jump over this. We also had in Latin America a recent event where we also had a panel on the risk-based supervision, and we also learned there quite interesting things what different players are doing. And the Peruvian example was also mentioned again there. So that's my last slide. That's really, so we are now focusing on the guidance documents. We are advancing, let's call it like this. The chapters of the guidance documents, we are getting the case studies in, we are looking at the case studies so that they have a little bit of a similar look and feel, and then we will put it all together. And that will still take a couple of months. So we hope that by the end of this year, we can submit it to the Implementation and Assessment Committee for a first discussion. The next RBSIF meetings, if you want to be a guest, is on the 13th of July. It's virtual. And the other one is on the 10th of October. And a deadline for the collection of the case study is on the 29th of June. But we could also be a little bit flexible should you be interested and would need more time. With this, I would like to conclude on the very exciting journey to risk-based solvency regimes and supervision. And I hope you could take something away from it on your own journey. And please, if you have questions, don't hesitate to ask them. Thank you so much for your attention.
Thank you, ma'am, for your wonderful presentation. Could you please describe how IFRS 17 is posing challenge to implement the RBS system, risk-based supervision techniques?
On, if I understood it correctly, so it was more or less, why is IFRS 17 causing changes? So there are some governments in the world that have decided that the financial reporting needs to be done on IFRS, and IFRS 17 is on insurance contracts, and it in particular impacts the valuation of your liabilities. And assets. Anyway, they are already market-based, but on the liabilities, that is the key impact. And in particular, it impacts on life insurance. And by the way, we will have, organized by AFIR, so the Asian Forum of Insurance Supervisors, we will have a 2 weeks course carried out by the IMF in the last 2 weeks of June, maybe the last week in June and the first week in July on IFRS 17. That is organized and the registrations go via AFIR. So some of you may have already got the information. If not, I can also get you in contact with this. It is a 2 week, 3 hours per day for 2 weeks in a row, virtually. Everything is virtually and cost-free. So, but I hope I responded to your question. So some have to implement it, and IFRS 17 is impacting on insurance contracts, and in particular on life insurance contract with regards to the valuation, the market consistent or the market valuation of liabilities.
First, thank you so much for insightful presentation. My question regarding IFRS 17, did you think you will take in your consideration the implementation of IFRS 17 when you prepare the RPA or RPS, or you will lift it to the industry, because this is main obstacles for all insurance regulator among the world regarding to consider the technical, I mean, a new item, technical, in the balance sheet and income statements regarding IFRS 17. So my question, did you take in your consideration when you build the formula and templates, a new item of IFRS 17 or not?
No, we will not, but so first of all, the ICP allows you to choose any valuation method, yeah, for your solvency regime. So there is not one that is superior to another. You can use IFRS 17. Those jurisdictions that anyway are mandated by their governments to move to IFRS anyway are using IFRS as the basis for their solvency and the valuation. So it's ICPs 14 and 17, one of the two. There is this choice. Secondly, we do have an accounting and audit working group, and they are holding roundtables. So the next roundtable will be in South Africa, I think in September or October, to discuss and exchange the experiences of different supervisors implementing IFRS 17. And yeah, thirdly, we are trying, we are not a, yeah, what should I say, we are really trying to help members with this training program that is executed by the IMF. So we have done one for Eastern Europe in January, and the IMF was so kind to repeat it now also for Asian supervisors. But we are not making it mandatory from an IIS perspective. There should really be the choice, the jurisdictional choice, because not for all jurisdictions it may be the optimal basis for valuation.
Thank you for your presentation. I noticed that one of the challenges of the implementation of RBC is that some of the insurers do not want to take up the RBC. So could you share some experience that what the regulator should do for the regulator who doesn't want to implement RBC? Will you grant some extension or exemption, or give them some transition period that you must do? Oh, thank you.
Excellent questions, really. All your questions are really great. Yeah, what to do with those who don't want to do it? There are different ideas. First of all, as said, it's really important to bring all stakeholders with you. That is already the best preparation that you can do in transitioning to RBS. Secondly, not all, it really depends on your market, yeah? But you could also introduce a threshold for those who have to do it and those who don't have to do it. And then you can still have, as you have mentioned it, transition periods, because as said, it is not going to happen overnight. So anyway, as a supervisor, you also need to monitor it. And then when you really see that it's always the same challenge, yeah, that you are facing with the entire market, then you would also need to think about what to do with it, yeah, because then it seems to be a structural issue. So those are three ideas. Thresholds, that's usually done. And for example, in Germany, what they did, Germany has a lot of small insurers in their market. Also some that do agricultural insurance, for example, against hail in northern Germany. They are cooperative insurers mainly. So they have introduced, also a kind of minimum requirements, which are more proportionate to such small insurers. In Solvency II, there is a threshold. Then a transitional period is in most, or if not in all, regimes that have transitioned. I'm aware of transitional periods of 2 to 3 years. Yeah, if you have then structural issues that you encounter, you need to address them. And get them along with you, because yes, they may be resistant at the beginning. And then, of course, as a supervisor, last but not least, you can also sanction, yeah, if it doesn't help at all. But that you wouldn't do at the beginning, for sure.
Thank you, Madam, for your detailed explanation. I've got two questions for you. One is, can you provide examples of how implementation of RBS regime has impacted insurance industries? And then the second one of issues that we identify that the paradigm shift to compliance-based supervision to RBS is quite difficult, and how to overcome this matter. Thank you.
Okay, so if I understood you correctly, you mean once you have the framework, the regulatory framework, and then to supervise it?
Yes.
Yeah. No, that's true. To be very, very honest, that's very true. This is why we really intend to have from 2024 onwards also a guidance to focus on this one. Yeah. So I can say, from a European perspective, it took a long time. And what was important was a so-called internal manual how to supervise. Yeah, so that was really important to develop a supervisory manual and also exchange practices amongst the European supervisors, how they are doing certain things, how they are supervising an ORSA, for example, and what would then be the requirements they are looking at the ORSA. What we can do from the IIS side, we have quite a comprehensive program on implementation assessments of the insurance core principles. And that also, that looks at the requirements of the standard, for example, but it then looks also at the supervisory practice. So that may sound a bit too theoretical. Okay, we have a member assessment program, the so-called MAP. We have just finished the fourth MAP since 2018. It is quite an intense exercise. Here, the team looks at how the insurance core principles are implemented in the market, first via regulation, but then they also look at the supervisory practice. So how is the supervisor then looking to what extent the requirements are implemented in the market by the insurer? So that is helpful for this kind of transition as well. Because from the practice, then the team will also tell you, okay, we know from experience, there are some recommendations, or there are also some other examples that you could learn from. So such a member assessment program is giving you a very detailed overview of how you observe, or how the insurance core principles are observed in a market, taking into consideration the supervisory practice. How do you act as a supervisor? So that's an intensive program that usually takes a year, 1.5 years, and it also draws resources from the supervisory side. And so far we have done Guernsey, Morocco, Mexico and Albania now, and there are very detailed recommendations, how you could improve also your supervision. The second example is the so-called supervisory forum. So this is why the supervisory forum and the RBSIF are holding once a year a joint meeting, also to have the link. The supervisory forum, and it's really for supervisors only, for day-to-day supervisors, and they are discussing practical examples on supervision. So this could be another option to help the transition. And we are bringing back from the RBSIF, we are also bringing back issues that we are encountering into the supervisory forum. For example, the next meeting today or tomorrow will focus on proportionality. How can you apply a proportionate, supervision? And that will be different depending on your market. So the supervisory forum is also a good opportunity to help with this transition, because you learn from examples from the others. Those are two immediate examples that I can think about, plus the hope for 2024 on the other guidance paper. But learning from practice and learning from others, that you can do best in the supervisory forum and also undergoing a member assessment program.
Yes, please. Thank you, Manuela, for your nice presentation. It was such a wonderful presentation. I would like to know, like, has been there a threat, like, you know, the MLNTF, money laundering and terrorist financing, related to the risk-based approach? Like, when we implement the risk-based approach, do the regulators, they have to be more worried about, for example, in insurance, life insurance sectors, in Asian markets, like MLNTF, when we implement the risk-based approach, is there going to be any threat? Or we have to work more strategically when we have to think about money laundering and financing?
I think I only have understood half of the question because it's even with the microphone.
I'll speak a bit loud now. Just want to know that when we, are on a path to implement the risk-based approach, regarding the life insurance sectors, is there some kind of, threat regarding money laundering and terrorist financing? Do we have to work more, cautiously regarding MLNTF?
Okay. So life insurance and risk financing.
Yeah.
That was the key point. I must admit, I don't have an immediate response to your question. It's a very good question. Let me think about it. I will come back on this to you later.
No problem.
I don't have an immediate response. Excellent. Thank you so much.
Thank you.
Perfect. That's good. It's a good, yes. But that's what we want, yeah, from the event, yeah, the exchange. Good question on life insurance and risk financing.
Thank you so much for your presentation. I have two questions. The first one, when we move to the risk-based capital, we will greater rely on the actual work. So in terms of the insurance regulator, the capacity of the insurance regulator, we lack of the actual skill in our system and also in the market. So what do you think, what is your suggestion on the actual concern in this one? And the second one, when we talk about risk-based capital, we always talk about the regulation, supervision framework, about the procedure, but we more not likely to focus on the information system in terms of the regulator in the country that are limited in terms of resource, budgeted in terms of the expertise in field. So what do you think the impact of what is the barrier of the regulator that lack of this resource in order to move to the risk-based capital? Okay, thank you so much.
Excellent. No, really, I love your questions. It's fantastic. The technical skills, that is, I fully agree. We have seen that in certain regions there is a lack of actuarial skills. Yeah, and that is in particular what you would need for the risk-based capital. And here the A2I is offering, together with the International Association of Actuaries, a skills training, which is also partly e-learning and in A2I Connect, and partly in virtual calls, or then also in some refresher and intensive module calls. I think Pascal can maybe speak a bit more about it, and we are very happy, really. I think we have it now in French, Spanish, and English. Yes. So it's a very successful training, and it's not to make an actuary out of you. It is to understand, what you need as a supervisor, when you need this kind of mathematical base understanding, for example, for risk-based capital. So that is an offer that we can make. I don't know when the next course will be, but maybe Pascal knows. And then on the MIS, so the biggest, you need it as a supervisor, you definitely need it. And I think in the future, you most probably will also need SupTech for this. For these MIS systems. They will become more and more sophisticated, the barrier that I have seen was really the templates. And I have worked myself 1.5 years on these templates. It's really, to have the templates correct, the cells correct, what you expect, which kind of figure in there, how it looks like, even if it's a comma or a point, So that is what I have seen as the biggest barrier. And then also a kind of an language that you need from an IT perspective to report it to you. So because you usually, I'm not an IT person, by the way, usually you need an interface to get it into the authority. But to develop these templates that are really, what should I say, intelligent. You can, of course, always have an Excel spreadsheet, and request whatever you wish from the market. But intelligent and smart would mean, okay, is this data that you need for supervision? Can they be, consistently reported from all the insurers from the market? Life and non-life will be different. So that is what, the templates and the IT language to the interface, so that you can smoothly collect it, and you can also run analysis on the data, because what do you do with a lot of data that you collect and you cannot analyze them? I think these I would see as the, as the barriers and the challenges.
Primarily, this is not a question to you because you wanted to share the experience. I just trying to respond to the AML question in terms of risk-based capital or risk-based supervision. So the AML part of our risk financing would primarily flow into risk-based supervisory framework, not necessarily into the solvency framework. While conducting this supervisory framework, the significant activity would come as underwriting risk or insurance risk. That is where this entire process of AML would get assessed and gets into the assessment of risk of insurance risk. The second part that could come in the capital is if there are claims that are more due to this AML issues, then your assessment of your liability would differ. To that extent, again, the risk factor for your insurance risk would differ. So that's how these two would get into your risk-based solvency or risk-based supervisory framework, depending on how the insurance company or the regulator formalizes its approach. Thank you.
So I'm not sure if there was a question in it, or if you wanted to share your experience, Priya.
Nepal Authority had, one person from Nepal Authority had asked about risk, what happens in case of AML activities, anti-money laundering and terror financing activities. You said you will come back later. So on that context, I have responded that this happens in this particular manner in risk-based capital.
And with AML, you mean asset?
Anti-money laundering and
the anti-money laundering. Okay, because I was on the match between liabilities and assets.
That's ALM.
Yeah, ALM, and not AML. It shouldn't be contradictory because you would need anyway, with a risk-based regime or not, to have your anti-money laundering and counter-financing of terrorism activities installed. So this is why I'm not so sure whether it would be, it is also risk-based, what you do on the anti-money laundering. It's also quite interesting when you think about the requirements and also what the Financial Action Task Force is requiring, how they are also assessing how this anti-money laundering is installed in the supervision. But I wouldn't see a kind of a contradiction. For me, it runs in parallel. But was the question if you could use the risk-based approach for anti-money laundering? I would say it's the other way around. You would benefit from a risk-based approach also for anti-money laundering because most probably you have more information, more data, and you know the risks of the market better.
I was saying what you exactly had said. I was not saying the contradictory. I only explained what happens, how it will happen. The risk will enable us to assess the anti-money laundering risk in terms of insurance risk and then translate into rating in the supervisory framework and translate into additional capital if there are really big holes in terms of risk-based capital. So that's what I did.
For now,
we are done.
Questions answered.
Okay, thank you. Thank you so much for your excellent questions. So I think I have now ruined these things. No? Yeah. Okay.
Thank you very much. Thank you, Ms. Manuela. Can we please put our hands together for her? Now, risk culture, like she mentioned, is underestimated, but definitely very, very important. And a risk culture must be embedded in governance together with risk management practices as well. Thank you to all our participants and audience as well for interacting and asking those questions. We hope that in each session, we've allocated time for the Q&A. And because we're such a small, intense group, we would like to have more conversations, more opinions, and experience sharing as well. So we hope that you would do that without any hesitation. But for now, you've been here since 9 in the morning, so we'd like to take a short tea break. So ladies and gentlemen, one more time, I'd like to request all of you to kindly come in and join us. I hope you have settled down so that we can start with our second session. Our presenter, Ms. Pascal Lam, has already joined us. She's the advisor at Access to Insurance Initiative. She has over 15 years of experience working in insurance and financial regulation. And at A2II, she leads on regulation, capacity building, and innovation. I think 3 areas that we are all very, very eager and keen to know more about as well. So ladies and gentlemen, I hope at the end of Ms. Pascal's session as well, you still ask her questions. Let's make it very engaging as well. I would now like to request all of you to kindly join me by putting your hands together and welcoming her on stage. Ladies and gentlemen, Ms. Pascal Lam.
Good morning, everyone. I'd like to extend my gratitude to the Nepalese Insurance Authority, to the chairman and the director, for giving us the opportunity to speak today on the topic of risk-based capital frameworks. As many of you know, the A2II is the implementation arm of the IIS on financial inclusion and dedicated to promoting access to insurance for unserved and underserved populations. The link between risk-based capital frameworks and financial inclusion is not always an obvious one, but ensuring adequate capitalization, risk management, and financial stability of insurance companies is essential for protecting policymakers and maintaining public trust in the insurance sector. A bad experience for a first-time buyer of insurance can be detrimental to long-term trust and confidence in the sector. Therefore, financial inclusion and risk-based capital frameworks are mutually reinforcing concepts. that contribute towards economic development, stability and resilience. At the A2I, as I mentioned earlier, we are committed to supporting insurance and building strong and stable financial markets that incorporate the specific needs of the uninsured and underinsured. And as supervisors across the globe are making significant efforts to refine their solvency standards, at the A2I we have identified a gap. While much research has been done in a few leading systems, the EU and the US systems in particular, less attention has been given to understanding the spectrum of risk-based capital regimes elsewhere, particularly in emerging markets. Therefore, the majority of this presentation will actually focus on the A2I's landscape paper, which will be published at the end of this year. I will also answer some questions and comments that came in earlier during Manuela's presentation and share some of the feedback we have heard from E&D supervisors. So the A2I Solvency Landscape Paper is a study that compares the level of sophistication of solvency regimes in a number of E&D countries across Africa, Asia and the Caribbean. The focus of the study and the results of the paper address the various Pillar 1 stages that jurisdictions are at. Over the next few slides, you're actually going to hear from my colleague Mbatsiri Mukomi. He is co-author of the Solvency Landscape Paper, and he's going to be with us in a virtual form. And hopefully this will work.
Greetings to everyone from the A2I Secretariat. My name is Mbatsiri Mukomi. I'm the second lead from the insurance regulator in Zimbabwe who worked on the solvency paper that is being presented herewith. My sincere apologies, I could not physically be with you in Nepal to discuss risk-based solvency-related matters to a greater depth. As alluded to by my co-presenter, Pascal, this presentation will focus on the quantitative aspects of the risk-based solvency. With that in mind, I'm going to give a brief overview on the Pillar 1 components. As shown in the presentation, the main features of Pillar 1 are broken down into 3 broad categories. These are, number 1, assets. The assets are determined by adopting a market value approach. Number 2, the liabilities. These consist of the technical provisions, which are determined using actuarial principles, and own funds. The own funds consists of the minimum capital requirement, which is regarded as the level the insurer is considered not to operate effectively. The own funds also consists of the solvency capital requirement, or in other instances that's referred to as the prescribed capital requirement, which is the level that assets exceed technical provisions and other liabilities with a specified level of safety over a defined time horizon. And lastly, the capital, which is tiered according to certain characteristics like availability, permanency, and whether or not it is free from any legal obligation. The solvency paper developed by the A2II categorized capital determination into 5 broad classes based on risk sensitivity. These are, number 1, the flat minimum approach. This is based on the absolute minimum amount only and is not sensitive to the insurer's risk profile. Number 2, the greater of index-based approach. This is linked to the premium or claim amounts of an insurer. More capital is required when this approach is being applied. It has the shortcoming that it does not show the differences between insurers with the same liability but different asset portfolios. This approach was observed to be the most common used by the Asian countries that participated in the landscape solvency paper that was developed. Thirdly, the additive index-based approach. The required capital or the individual capital charge for each risk under this approach is calculated by multiplying each risk factor that is usually expressed as a percentage by the value of the exposure. That could be, for example, the asset value, the premium income, or the insurance liabilities. It must be highlighted that the factors used in this approach are usually predefined and may involve stress testing in certain instances. A more developed approach that could be used in the determination of capital is the combinatorial approach, which combines individual risk capital charges. Furthermore, this approach recognizes assumed relationships and the diversification between risks. Hence, capital is determined by taking the square root of the sum of squares of the risks. And lastly, internal models. Internal models allow an insurer to determine the capital that is required by moving away from the standard formula based on industry-wide assumptions, as the insurer uses their own data and models. Internal models do, however, require regulatory approval prior to them being adopted. We are now going to give a brief summary of the findings from the landscape survey that was undertaken. The results of the study were quite intuitive, as they showed that 8 countries adopted a greater of index approach, 1 country used the additive approach, 2 countries used the combinatorial approach, and 1 country used the flat minimum approach in determining the required capital for insurers within their respective jurisdictions. For the country using the flat minimum approach in determining capital, draft regulations had been developed to transition to a more advanced solvency regime. The study also revealed that from the countries that participated, none of the countries had explicitly included in their regulations provisions that allowed insurers to use internal models to determine capital. 1 country did allow insurers, upon regulatory approval, to use internal models to determine appropriate risk margins within required confidence levels. Otherwise, default risk margin stress factors per business category were used. 4 out of the 12 countries also had different minimum capital requirements for life and non-life insurance business. The study also revealed that collaboration and clear communication with all major stakeholders, which are the industry, actuarial, and auditing profession, is of utmost importance. To further add, it also showed that the move to a more risk-based approach does take many years, dedication, and commitment. And lastly, striking a balance between the complexity of a more risk-sensitive approach relative to the level of simplicity appropriate to the data and skills available in the market is difficult. With that being said, ladies and gentlemen, I'd like to hand back to Pascal, and I wish you all a pleasant day.
Thanks to Mbatsiri for his recordings, and just to highlight that he is actually a secondee to the A2I from IPEC Zimbabwe. He is the contributor to the IIS RB SIF case study that Manuela mentioned, and the secondee program at the A2I is something that we do offer, and we would be very happy to receive requests from Asian supervisory authorities. Our last 2 secondees have generally originated from sub-Saharan Africa, so we would be very encouraging to see some applications from Asia. Just to come back to solvency regimes, just to highlight 3 key lessons that we have learned from this paper. First is the importance of collaboration and clear communication. As Manuela said, this is a journey that the sector has to go through together, and constant communication ensures buy-in from all the key players, and perhaps more importantly, the opportunity to leverage off the data and skills available. There was a question earlier from a gentleman on how to bring in a reluctant industry on this journey. And one supervisor that was part of this study mentioned that they started off by highlighting the benefits to a risk-based system for the sector, as well as acknowledging the challenges that was involved with the sector. From that point forward, they consulted with industry regularly, and actually before publishing frameworks or changing any frameworks, they first consulted with industry. At one point, they said that they were having essentially monthly meetings, if not more, with the sector. It made the sector feel heard, but also responsible for the transition themselves. This also speaks to the second key lesson that was learned, with the need to strike a balance between the complexity of a more risk-sensitive approach relative to a level of simplicity appropriate to the data and skills available in the market is difficult, and therefore working together with the sector is essential. I will come back to this point actually in my next slide as well. And as Manuela mentioned, transition takes time. Move to a more risk-based approach takes many years. One jurisdiction that participated in the study, it took them over a decade to make the transition. While I'm not advocating that time frame, it does take time. There were drawbacks, there were challenges, and it's basically, it takes time. It will not happen overnight, essentially. And also some of the challenges that were also identified. A common feature amongst jurisdictions, and one that was mentioned earlier by the NIA, there is generally a lack of strong technical actuarial capacity. This may be due to a limited number of qualified actuaries, or other risk professionals actually in that mind, within the jurisdiction, and a limited number also that work for the supervisor. This is why engagement with industry is quite crucial at times. We've noticed that once a supervisor has in-house technical actuarial capacity, this will lead to major changes in the way that the supervisor interacts on this topic and with industry. Data availability and quality was also a recurring theme. Risk-based solvency regimes require a large amount of relatively granular data for calibration and for the risk factors, and this data is not necessarily easily at hand. In particular, the feedback that we received is that the availability of the data was limited in these regions, and therefore hampering the development of solvency frameworks that are appropriate for local conditions. And lastly, poor developed capital markets limit the availability of appropriate local investments and data on the capital market for assessing market and credit risk. Overall, and as is to be expected, there are capacity constraints within supervisory authorities. And actually at the A2I, we have tried to address this, and we are continuously trying to address this, in particular through our trainings. As Manuela mentioned, on an annual basis, together with the IIS and the IAA, we offer capacity building for insurance supervisors on leveraging actuarial skills. This is a combination of self-paced learning and in-person training with actuaries. The self-paced learning part can happen all year round through our Connect A2I platform. This is our learning management platform, and it includes access to the IIS IMF roundtable on solvency frameworks that happen in Santiago that Manuela mentioned. All of you as supervisors can have access to Connect A2I. It is free and has a range of resources available for you. Please, my colleague Ronaldo Lombardo and myself, we are here to help you. And if you would like to access this platform, please do not be shy, come up and we will register you essentially to have access to it. It's very straightforward and it's very quick. We also cover risk-based supervision in our inclusive insurance training and through various blogs and reports, as well as webinars and dialogues. This afternoon, we have a session on capacity building, we have a dedicated session on capacity building. Therefore, should you have any comments on the activities that we are doing in this space, then this is an opportunity to voice them, and I encourage you all to give us this feedback. I look forward to this discussion this afternoon, but also please, this is the end of my presentation. Please feel free to ask questions now, and I look forward to them. Thank you.
Like Basel II in banking sector, there is a fixed technical formula to calculate the risk-based capital. Likewise, in insurance sector, is there any fixed formula to calculate the risk-based capital, or any country can determine their own formula or principle to determine the risk-based capitals?
Sorry, can you repeat your question? I couldn't hear it properly, sorry.
For banking sector, there is Basel II to calculate the risk-based capital. There is a fixed formula. I like to know, is there a fixed technical formula to calculate the risk-based capital worldwide for insurance company, or country-wise there is specific, they can develop their own formula by country-wise?
So I should, thank you. I should maybe put a caveat. I am not an expert in this field. I'm actually more familiar with the Basel requirements than I am with the Solvency II requirements. But from my understanding, there is no fixed risk-based formula for insurance. However, what I will do is I will come back to you on this question and double check with my colleagues. Oh, Manuela, please.
There is of course Solvency II, and you have the standard formula in the legislation for Solvency II. And from the IIS side, we are working since 3 or 4 years on a so-called ICS, Insurance Capital ICS. Oh gosh, what is the S? It's a global capital standard for internationally active insurance group. This is what I really need to emphasize. So it is supposed to become the analogon to the Basel formula, but for internationally active insurance groups. So it's not for small domestic insurers. We are in the 4th year of monitoring, and we aim to conclude this project by the end of next year, 2024. And then the ICS, insurance, capital, what the hell is it? Standard, thank you so much, insurance capital standard, I should know this. And then it will become a so-called PCR, a prescribed capital requirement. So that's the idea, and yeah, it took 5 years to develop it, and let's cross fingers that it will happen by the end of next year. And maybe, once we can free up resources, we could think about a simplified version. And then you would have it also for smaller insurers and have the different modules a little bit stripped off the complicated requirement for internationally active and cross-border groups. But that is a vision for the future.
Thank you, Oscar, for insightful presentation. Just I have one comment or question regarding the Zimbabwe expert regarding the risk-based approach. My colleague mentioned that they depend on rely on the combinatorial approach. Is it more fit than additive approach among the risk-based new template of risk-based approach or risk-based capital template, or we can continue an additive approach even we use risk-based capital?
So a point that we routinely make is that you have to develop a risk-based framework that is suitable for your local market, essentially. Something that there is no one-size-fits-all approach, and what we are very keen to say is that risk-based solvency transition needs to be adapted to your market and your market's needs in particular. Also, there's no point in taking an approach that was developed for another market because it just could not be appropriate for the conditions within your market. There might not be the data that's necessary and the data that's required. On the IPEX Zimbabwe case study, this is actually coming through the IBSIF, the IIS RBSIF, And actually that details step by step, and I would really encourage members to read this paper when it comes out, because it goes into a lot of detail about the processes and the approach that they have taken. Also, what I would add, just to add on the difference between the A2I solvency paper, is that this solvency paper will very much complement the work that the RBSIF is doing. While there will be case studies within the RBSIF paper, the A2I solvency paper will just go into a little bit more detail on the challenges and the issues and the problems that supervisors have faced, and it will go into a bit more detail on that front, essentially. But the two papers I very much see as being very complementary to one another, and will give a bit more insight for emerging markets in particular on how to approach it, and how to approach it from their different markets as well.
This is not a question, but this is a kind of a thought process that always I have. Now that we have risk-based solvency, risk-based, IFRS, though we have discussed in the first session, the point of view that I have is IFRS, whichever country is practicing is going to practice, it has a specified methodology to value the liabilities. In terms of actually assessing the portfolio of the insurance company and coming up with the risk discount rates that to be used for estimating the liabilities. When it comes to the risk-based capital frameworks, which I have studied in some of the countries, the risk discount rate is prefixed by the regulator in the risk-based capital regime. So these two really get contradictory. In terms of, one is saying that if I am adopting IFRS, then I'll have to use, as per estimation, a realistic thing which reflects my assessment of this. And in case of risk-based, I'm just trying to see this, risk-based capital, if some risk-free rate is being suggested, then how does these two get complemented? Is my question. Maybe in IAS, when you are writing these papers, maybe it should also get captured as to how these two should get married in terms of getting into one alignment, or maybe regulators will have to take a call of having two different financial statements to reflect these two. So that's what my take.
Thanks for that question, and I can see Manuela shaking her head, so I just want to thanks for that question. And yeah, IFRS 17 is a challenge. We are aware of this. It's a challenge for regulators and for the sector. And I think there could be more capacity building on this. So we have noted your point, and I've made a note of the comment that you've just made. And I think what we will try and do in the long term is actually to establish some more capacity building on this and more training, essentially. Because I understand that there is a level of confusion, and it is quite challenging, both within the sector and the regulator as well.
Oh yes, okay. No, Meena Kumari, thank you so much for the question. No, you don't have to use IFRS 17 unless, there is some country-specific, someone. No, there are. I'm coming from the ICP. I think it's ICP 14 valuation. Because 17 is capital adequacy. So it's ICP 14. ICP 14 is very clear. You do not have to use a specific valuation methodology. You are free in what you are choosing. Usually, those countries that are, the decision is taken on government level, move to IFRS 17. Some only move, for listed companies. Others only move for international companies. Some jurisdictions have done it for the entire sector, but there is no, from the insurance core principles, there is no obligation.
But if you do it very often, they also use it as the valuation basis, yeah, for a risk-based capital regime. Yeah, very often. But it's not a must, it's not an obligation, and it's not a requirement from the international perspective. Yeah. And on the two financial statements, yes, this is, to be very honest, what we had to live with already before IFRS 17, yeah, because some companies, they are disclosing their financial statements in IFRS and also in domestic accounting standards. Yeah, so they do it twice. So that is not new with IFRS 17 or something that happened in the last couple of years. That's as it is. And then you usually you have these tables, you know, where you can then compare. So they have a specific name, but then you have to live with two tables. Sorry for this.
One question, please. Can you provide us or elaborate where insurance companies or insurance industries use this risk-based capital framework has had positive impact on its financial stability and viable long-term viability? Thank you.
So actually, as Manuela mentioned in her presentation, transition to a risk-based solvency system is very beneficial in the long term to financial stability because it's an excellent mechanism for identifying very early on emerging risks. This is beneficial for the regulator, but also more critically for the sector as well. I know that there's a lot of complaints sometimes from industry that, you know, transitioning to RBS does require compliance, does require quite substantial work from their sides, but in the long term there are clear benefits. Firstly, a risk-based approach is much advantageous to industry just because it means that they are assessed on their risk rather than just having a set standard across all industry. It makes the industry and the sector more agile, more flexible, but more importantly in the longer term, the point that Manuela made, it's critical for the industry to be able to see the emerging risks that are coming. It's critical for the supervisor as well, but also for the industry. And this system does allow that. It is much more agile than what you have previously. So really, these are, for me, the clear benefits. And actually, from a financial inclusion perspective, a sector that is aware of emerging risks is beneficial for policyholders.
It's very confusing for me that, therefore I'm asking a question. What is the difference between the risk-based capital regime and solvency regime? Both are mutually exclusive or not? If we want to implement the risk-based capital regime, we can skip the solvency regime. Is it like that? I want to know the basic difference between the two regimes.
That's a fair question. I might actually offer Manuela to go first because I know I have something in my mind, but I think Manuela will probably communicate it better than So, for me, solvency is essentially about how, and Manuela, please come in if I'm wrong on this, but for me, solvency is essentially about how resilient you are as a firm, essentially, and the capital requirements is what you have to ensure that you can commit to your payments and to commit to your policies that you've given to policyholders, essentially. That, for me, is where the clear difference is, essentially. But I think...
No, you are right. It's confusing. No, you are absolutely right. It's confusing. So in our definition, we use risk-based solvency more for the, all the three pillars, Pillar 1, 2, and 3, and the risk-based capital would only focus on Pillar 1. But that is a choice that we have made. I don't say that this is a globally valid definition. But maybe we really need to put this in the acronym list, to be very honest. You're absolutely right, this is confusing. Yes, I think we need to, we need to watch out how we use the terminology.
Hello. Thank you for your presentation. I have a question. As an insurance regulator of Cambodia is now applying for the risk-based solvency approach, and we consider it as a solvency one. So we have to do a transition to the risk-based capital. But during this time, we also consider should we move from solvency one to solvency two, step by step to RBC one and to RBC two. Or we should move from Solvency 1 to RBC 2 directly to up to date of the current practice. So what is your suggestion in terms of give us some suggestion or advice so that we can make a proposal to the Director General? Thank you.
So, I am not qualified to give any suggestions on this, and actually I just want to reiterate the purpose of the A2I is on capacity building. It's not on training and providing skills for supervisors. It's not in my capacity to make any suggestions on a transition to Solvency II, I'm sorry.
I have a question. Thanks for an excellent presentation. You mentioned about risk-based solvency, risk-based capital as a tool to bring in financial stability in the market, which is good. But has the A2II also looked at the protection gaps in the markets, in the emerging markets especially, and also done some sort of an assessment in terms of how introduction of risk-based capital has helped in increasing insurance penetration, or has something happened otherwise penetration has declined? I have some examples. I thought I would listen to you first.
Yeah, thanks, Arut, for that question. That's a really interesting question. We haven't at the A2I. We are aware that there was a World Bank paper that was being prepared looking actually at this point in particular. But I'm not really sure where that paper went. I don't think it was published in the end, but I can try and find out for you. Because this is an interesting point, and it is probably something that needs to be addressed as well. I know. The aim is to publish as soon as possible. It will most likely be in Q4 of this year. Also, on the actuarial skills training, similarly, we are looking for a date at the end of this year as well. If there is a specific, actually, this would be helpful for the session that we have later on capacity building. If there are certain times of the year where it is easier to do training for staff, then please do let us know. This is really helpful. We do regularly get feedback that actually the period from September to December is quite challenging because it's business planning round. So it would just generally be very helpful to gain from the room when is good to do training. The actuarial training tends to happen over a 4-week process, so it's quite long, but it happens over 2 days each week, essentially. But it does require a level of commitment, and it does require also a lot of discipline, self-discipline, because there are the self-paced learning modules. And participants are expected to attend, having already come up to speed on the self-paced learning modules. So this would be really helpful from our perspective. If you could think about this for the capacity building session, that would be very helpful. Thank you.
I don't have a question, but I just want to mention that Nepal is also moving towards, risk-based regime and, risk-based capital and supervision. So I just want to request our consultant actually to share some some of the things that Nepal is doing right now regarding risk-based capital and solvency, so that it will be a fruitful discussion further.
Thank you, Pujan ma'am. So definitely glad to share what we've been doing so far. So Nepal is going to implement risk-based capital and solvency regime from next year, July 2024, with a gradual implementation to actually have a full implementation by July 2027. And in conjunction with that, we are also implementing ORSA, where only selected insurers had been, only a few number of insurers has been selected to actually perform ORSA based on certain threshold. The idea is that, as we kind of supervise more the bigger companies, we hope the smaller company will follow suit. And on top of that, we've also issued climate risk disclosure, which means for insurers, they need to disclose in their financial statement the extent to which their risk profile exposes them to climate-related issues. And the way we have done it is, it's a gradually, companies are required to disclose certain information in a gradual form, within first year, within 3 years, within 5 years. So RBC, ORSA, and climate risk disclosure, we are working in collaboration with the World Bank team. So they've been supporting us since pretty much we started engaging with them since 2016, but really we started working in earnest with them from middle of 2021. And in parallel, what we've been doing is, in collaboration with Toronto Centre, we have developed our risk-based supervisory framework. This is basically how it guides the supervisor to go on doing a risk-based supervision, and also to come up with the guides to supervisor intervention. And that's going to, once it gets approved by our board, that gets implemented immediately. We are already working on we are already working on pilots with one big life insurers, one big non-life insurers. So the idea is then we keep refining our framework. I just want to address, one of the questions, that he had was, how do we transition is it to risk-based 1 to 2 or solvency 1 to 2? The question is, you need to come up with a framework that works for you, for your industry, and then take a proportionate approach. And what that proportionate approach looks like really depends on your own context. And that's something we have a lot of discussion with our counterparts to get more understanding of how we actually end up applying that in practice. So yeah, that's all I wanted to share. Thank you.
Thank you very much to Pascal. She will have another session after lunch break as well, where she'll be talking about digital innovation in insurance. We're talking about a lot of these different risks that are coming forward, like the pandemic, the cybersecurity issues, climate change. So it would be very interesting to know more about digital innovation in insurance as well. How can the insurance sector incorporate digital innovation? This is, I think, one of the first times, or the very few times, when we are ahead of time during summits. Usually summits or conferences run really, really late, like about half an hour or an hour. But here we're actually half an hour early, because our lunch break was supposed to be at 1:30, and we're almost done with this session by 1. So if you're hungry, you'll have to wait for 20 more minutes for lunch to get ready. But because we have many different experts from all around the world working in the insurance industry in this sector, so we have regulators from all different organizations, representing different organizations from different countries. So we would definitely like to urge and request you to make these 20 minutes the most valuable 20 minutes of the session as well, or post-session as well. So requesting all of you to kindly network, interact, and We have already asked the hotel to expedite lunch. So lunch should be ready in another 15, 20 minutes, but we would like to break now. I think some water, tea, coffee might still be available outside. So if you haven't yet had that, you can please do that. We will see you post-lunch at around 1:30. Yes. Thank you very much. Thank you all. Hopefully this session so far has been encouraging. Our technical team is also trying to see if we can have a video on Nepal. I hope, and talking about Nepal, I hope, let's see a hand raise of how many people are here for the very first time. First visit to Nepal? Oh, quite, okay. A lot of people, all right. So I hope that you don't have a really busy schedule and do have, how many of you have at least one free day to explore Nepal? Okay. I hope more hands would be up. All right. Please definitely utilize this time to explore Kathmandu. If you have the opportunity to go out of Kathmandu, we'd suggest that as well. But there are many fabulous places to visit, places to eat. We have World Heritage sites that you can visit. You are actually in the heart of the city, Dabarmang. Through, like from here, you can travel to many different places as well. And you can definitely ask our colleagues from the Nepal Insurance Authority and get some recommendations on places to visit, places to eat. You'd be surprised as to how delicious Nepali food can be as well. So I hope that you are ready to be adventurous a little bit and explore. Our tagline, our theme of Nepal Tourism Board, or promoting Nepal, is that once is not enough. So many of you are visiting Nepal for the very first time, but we hope that this will not be the first and last visit in your lifetime. We hope that we are able to create a great impression on you, and so you'll be back with friends and family for maybe a non-work related vacation as well. Yeah, so let's have a look at the video.
Gumante, the amazing travelers.
Gumante, Gumante, हामी सबै घुमन्ते
One of the most significant trends is the use of data analytics and artificial intelligence in insurance. Insurers are using data analytics to better understand their customers and their risk profiles. Through the use of big data, insurance companies can gain insights into consumer behavior trends and patterns and use this information to create personalized policies that meet the specific needs of their customers. AI is also being used to automate routine tasks such as claims processing, underwriting, and customer service. This helps insurers to reduce cost, improve efficiency, and provide a better customer experience. Blockchain technology is also being used to improve transparency and reduce fraud. It enables insurers to create secure, tamper-proof records of transactions, which can be accessed by all parties involved in the insurance process. This helps to reduce disputes and ensure that claims are processed quickly and fairly. Finally, the rise of Internet of Things is also having a significant impact. Telematics and devices such as connected cars and smart homes are generating large amounts of data that can be used to create more personalized insurance products. For example, insurers can use data from a telematics box in a car to create usage-based auto insurance policies that are tailored to the specific driving behavior for each individual customer. Also, from a customer side and from a consumer side, it's the use of apps and online portals as well as paperless processing. These trends are being applied throughout the insurance value chain, from the design, writing, and pricing of products to their marketing and distribution, through to claims processing and ongoing management of customer relationships. This image is actually taken from the IIS paper on digital technology and inclusive insurance, published in 2018. But I would just like to highlight that since this paper, there has been an IIS report done on fintech developments in the insurance sector. I highly recommend this paper. It presents the high-level findings of a deep dive assessment into fintech developments and their role in insurance. Topics include open data, DLT, distributed ledger technology, and AI. Another significant tech trend in insurance is the rise of insurtechs. The IIS defines insurtechs as a variety of emerging technologies and innovative business models that have the potential to transform insurance business. These companies are really using technology to disrupt the traditional insurance models and are leveraging technology to streamline processes and reduce costs. According to McKinsey, the Asia-Pacific region actually accounts for 14% of insurtechs globally, and this region is actually expected to be the fastest growing in the next few years. The clear advantage for insurtechs is that they are able to market in fundamentally different ways than incumbents can. One advantage that insurtechs exploit is their freedom from legacy products, processes, and IT systems. They are able to design digital processes, products, and systems from the ground up, relying on the latest technology. They also use their digital expertise to maximize value in a number of ways. Firstly, increased connectivity. Insurtechs use AI and bots to provide robo-advice through a digital customer interface with digital distribution. Targeted product concepts. Insurtechs are able to offer personalized, small-ticket products based on usage or value-added services. Full automation. This is really driving down costs in particular. By an automated-only approach, insurtechs cut costs and accelerate processes to meet customer expectations. And finally, data-driven decision-making and insights. With access to diverse sources of data, including telematics and smartphones apps, insurtechs are applying machine learning techniques to offer innovative, personalized products and services. I've highlighted some of the insurtechs that you're seeing on the rise in Asia in particular. And when we've been discussing this with some of the supervisors, the real attraction of insurtechs, there's a lot of excitement around insurtechs. They make their products seem very accessible. But also, something that Pula have mentioned to us previously is the attraction of Pula is that people are not purchasing insurance. They're purchasing something that is visible. They're purchasing fertilizer for their crops. They're seeing a visible element to their product. And that is something that we sometimes hear from supervisors. The reluctance to buy insurance is sometimes because it's not a visible product. Whereas with InsurTechs, you're actually seeing the attachment of insurance to visible product. The overall impact on the industry is that it has made insurance more efficient and cost-effective, allowing them to offer more competitive prices to their customers, but also, as I mentioned earlier, by using technology to collect more accurate data and improve risk management. This has entailed more accurate pricing. Index insurance, for example, has enabled products to be accessible in a way that was not possible or not viable in the past. Also, quite critically, traditional insurance has not had a lot of interaction with its customers, especially post-sale. And with digitalization, this is changing. And increasingly, this sector is becoming much more consumer-focused and much more visible to its customers as well. This leads me quite nicely onto my next slide, perhaps because certainly from an inclusive insurance perspective, one of the key advantages of digitalization is that it has made insurance more accessible to customers. By using digital channels, customers can purchase insurance products and services more easily and quickly than ever before. They can access information about their policies, make claims, and track the status of their claims. This generally improves the consumer experience with insurance. This greater transparency builds consumer confidence and a greater understanding of how insurance works. As I mentioned earlier, a product that is really growing in importance is index insurance. It's becoming particularly relevant for the world's populations that are vulnerable to climate shocks. Index insurance is increasingly seen as a critical risk management tool, which allows victims to have access to finance and build resilience against future shocks. The IIS defines index-based insurances as insurance contracts in which a claim is defined with a reference to a predetermined index. But what does that actually mean in practice? So using flooding here as an example, and also a slight disclaimer, there are obviously different models, essentially. But the insurer will use modeling and satellite imagery with other data to predetermine flood levels and thresholds. A certain flood depth will trigger a payout, and this payout will depend on the intensity of the hazard. So if you have severe flooding in an area, then the payout will be higher because the impact is bigger. So after the flood has hit, the insurer can measure the depth and in turn trigger the insurance coverage. The benefit is that the calculation of the hazard can be done very quickly, and subsequently so can the payment and the claim side. Sorry. Also, pricing revolves around understanding the frequency and the severity of the hazard. So you can price an estimated loss because your analytics have less uncertainty. This can be advantageous, especially in emerging markets where there can be very little claims data, and other data that can help insurers and reinsurers price more accurately. So often there is a big uncertainty band around traditional insurance and indemnity covers, which makes the insurance cover more expensive. But the downside is that the intensity of the hazard triggers the payment. So if you are below that trigger, you could receive nothing. And if you are above that trigger, your predefined payout might not match your actual loss, which is what is referred to as basis risk. The A2I has been doing quite a lot of work in this space. And in particular, our work started in 2018, primarily because these products do show significant problems, but their implementation is complicated. So our index insurance report on the status and regulatory challenges provides an overview of how supervisors have been dealing with the challenges related to index-based and how various approaches have unlocked opportunities to develop the market and promote access to insurance. The regulatory approaches observed in the survey broadly fell into the following three categories. Firstly, the adoption of specific index insurance laws. and regulations, providing legal certainty for index insurance. Secondly, the issuance of a legal opinion in favor of including index products under insurance law. And thirdly, the adoption of a pilot project, usually in the context of a regulatory sandbox, as an exception to existing law, essentially. So therefore, what I like about this is that it kind of reinforces that regulation is not the only way forward. There are other approaches. And actually, we have continued this work. To develop this work, we have actually partnered with the UNCDF. And I will now play, if possible, if we could play the, yes please, thank you. If we could play a short video from the UNCDF, who unfortunately could not be here with us today.
Very good morning to all the participants, at the Asia Insurance 2023 Summit that is taking place in Kathmandu, Nepal. My best wishes and warm greeting to all participants. My name is Krishnan Narasimhan. I am the Global Lead Specialist for the UN Capital Development Fund's Climate Disaster Risk Financing and Insurance. I also manage the Pacific Insurance and Climate Adaptation Program. What I'm going to talk to you today is about the Index Insurance Best Practice Guidelines, a publication that we jointly developed with the Access to Insurance Initiative and was launched last year. The technical support for this piece of work was provided by Messrs. Risk Shield Consultants, a Zambia-based consulting firm. But we worked very collaboratively with the Access to Insurance Initiative in getting this publication off the ground. I will briefly mention about why we did this research and developed the publication. So when the Climate Disaster Risk Insurance Program was started by the UNCDF in the Pacific, the context of the market in the Pacific is such that there are significant supply and demand side challenges, but there are also challenges around the policy environment in the sense that none of the Pacific countries had any form of micro insurance regulations. So therefore, any inclusive insurance intervention and more so index insurance was absolutely new to the region. And the small island developing states in the Pacific are characterized by low population densities, low populations like per se, hard to reach populations, very challenging infrastructure support that they have. And of course, the usual demand side problems like lack of proper understanding of financial products and services, and more so insurance. So when we started engaging banks and other insurance regulators in the region, because the type of products that we were developing were at the micro and the meso levels, which had to be regulated, which were under some form of regulation. But since there was no micro insurance regulation, we had to engage the regulators, and they said that, do you have examples from elsewhere in the world, from markets elsewhere, or geographies outside of Pacific, where index insurance has been there, where parametric insurance has been there, and how have the regulators in those markets approached this subject? And that's when we started engaging with this technical support firm, and then we studied 10 different markets, how they were treating or how those regulators were treating index insurance. It's not this actually gives guidelines not only to the insurance regulators, but also to the other practitioners in the industry. The other practitioners would include governments, specifically ministries of finance, the ministries of agriculture, the national disaster management offices, the meteorological offices, and of course other like private sector and public sector players. And also there's a separate section for insurers and reinsurers. This publication was launched in July of last year, and since then it has also been used as a learning and knowledge sharing tool in several workshops. It's been well received, and a link to this publication will be shared by the organizers of this event. And I would encourage all of you to go through the link and read the link. So in brief, I'll also talk about the Pacific Insurance and Climate Adaptation Program that UNCDF is implementing in the Pacific. Though the initial 2 years of the inception phase, which was completed in December 2022, was largely focused on the Pacific small island developing states, the expansion phase is focusing on additional countries in the Pacific, but also undertaking gap analysis and scoping and feasibility studies. And we are also planning in a few Asian countries that would very much include Nepal as well. The main objective of the program is to build the resilience and preparedness of the small island developing states in the Pacific, climate change, and of those who are not familiar with the Pacific small island developing states. These are one of the most vulnerable countries in the world, and they figure in the top 10 or top 15 or top 20 list in the World Risk Report. Many of these markets face multiple calamities every year, be it extreme weather events like cyclones, earthquakes, heavy rainfall and flooding, and some parts of the Pacific also have drought. And many of these countries do not have adequate disaster risk financing mechanisms, so much so that they can effectively respond and recover from these extreme weather events. The usual instruments that are deployed are repurposing of national budgets, were meant for infrastructure, meant for schooling, meant for education, health, etc., get diverted to disaster relief, and or external assistance from donors. So therefore, our program looks at low-income households and communities, MSMEs, cooperative and agriculture agencies, financial institutions, and these are market-based instruments involving the private sector insurance companies, and all these solutions are digitally delivered through mobile technologies, digital technologies. Agriculture, fisheries, and tourism are the main focus, with the cross-cutting focus on women, youth, and persons with disabilities. In the initial 2 years, we have covered 3 countries in the Pacific, Fiji, Vanuatu, and Tonga, where nearly 5,000 households were covered under pilots. And now we have the scale of the which 4 additional countries in the Pacific, Africa. Has unique market ecosystem where we firmly believe, and our hypothesis is based on the belief that there are significant but the ecosystem is that the full potential of each market players, be it the public sector, be it the private sector, be it the government and other agencies, can come together to deliver sustainable market solutions, parametric insurance solutions, index insurance solutions to meet the risk protection needs of the vulnerable populations. And that's exactly what we have done in the Pacific, and with very good results. I think more on the results and what the program has done, we will probably share as a slide deck later. The publication itself that we developed with Access to Insurance Initiative is primarily in 2 parts. One part, like I said, is for the regulators. It talks about general principle, defining and different insurance product and its categories. Then there is a specific focus on consumer protection, on oversight, intermediary, and sort of distribution channel requirements that the supervisor has to have oversight of. And then there's separate on supply side guidelines and prudential supervision. So this forms inputs on what sort of approval processes can be followed, what sort of product review processes followed, and also on the minimum requirements. So these are covered in the one for the regulators. For government, we also have under consumer protection, we talk about how basis risk can be managed, what should be the minimum design features, then the claims calculation, talking about complaints management, and also about how claims can be adjudicated and the minimum marketing and disclosure requirements. Then when it comes to the best practice considerations or the best practice guidelines, there are separate sections for Ministries of Finance, Ministry of Agriculture and the Meat Office. What role can they play in facilitating the market or actually creating the enabling environment? This includes indirect premium subsidy through tax waivers, direct premium subsidies wherever possible, and where they can create insurance pools and also access to the global reinsurance markets. Then there are separate recommendations. What should a distribution channel partner like an agriculture institution or a cooperative or a microfinance institution should do, and how can they promote index-based insurance for their members? There's also a separate section on what the reinsurers should do in terms of actually bringing capacities to underdeveloped markets. So UNCDF primarily focuses on LDCs, the least developed countries and underdeveloped markets, and many of the recommendations contained in this publication is applicable underdeveloped markets. I would encourage all regulators to read these regulations and other practitioners to read these publication and make best use of the publication. Both A2II and UNCDF remain committed to increasing awareness and knowledge sharing. That's why this publication brought. We would like to thank A2II for this opportunity, and I would also like to thank our technical partners, Risk Shield. For further questions, I can be reached by email, which will be shared by the organizers. Thank you very much, and I wish the 3-day conference all success and all the very best for very engaging, for very high level of.
So thanks for Krishnan for doing that video. And actually here are his details, as well as a link to the paper that he mentioned that was published in partnership with the A2I. Just to provide a bit of an overview of this paper for insurance regulators and practitioners, it does have a focus on the Pacific Island countries, but do not let that deter you, because it is relevant to regulators globally, precisely because it highlights the advantages of index insurance, but also quite critically, it also includes considerations that supervisors need to factor in, both from a market conduct and consumer protection perspective, as well as a prudential one. And as Krishnan mentioned, it is divided into these 3 sections, so it's very user-friendly and very accessible. Also, if you have any questions regarding the Pacific Insurance and Climate Adaptation Program, PCAP program that Krishnan mentioned, the A2I is not specifically involved in this program. This is taking place within 7 Pacific countries, but we are involved in the part of the program going forward with our partnership with the UNCDF. And it continues, and following from the lessons learned from that project, we are in the process of developing an index insurance training, which we hope to launch at the end of the year. If you have specific questions concerning the PCAP program, then we are happy to direct them to Krishnan, but also I'm glad to say that a colleague of his is in the audience. Hi, if you want to introduce yourself, please, Timothy, go ahead.
I think, thank you so much, Pascal. So once again, I'm Thomas Gurian, working as a digital finance specialist with UNCDF based at Kathmandu. So yeah, thank you so much. I think this is very insightful. Thanks.
Thank you, Timothy. So with innovation, regulatory risk is unfortunately not just confined to index insurance, though there are recurring themes that we keep hearing about from across supervisors and across regions. As I've mentioned, innovation often challenges existing regulatory frameworks, and adjustments often need to be made to ensure effective oversight and consumer protection. Also, while innovation can enhance customer experience and financial inclusion, it can also present consumer protection risks, and innovative practices should not compromise consumer rights or result in unfair treatment or discrimination. Also linked to this is the increasing use of technology and data-driven processes. The collection, storage, and use of sensitive customer information has become critical. With this as well, insurance companies are becoming attractive targets for cybercriminals due to the vast amount of personal and financial data they possess. Another challenge that we keep hearing is that supervisors struggle to keep up with the rapid pace of technology advancements. The rapid evolution may often outpace the expertise and knowledge of regulators and supervisors as well, making it challenging to assess risk accurately, which can also lead to regulatory arbitrage. With innovation transcending national boundaries as well, regulators and supervisors face challenges in achieving international coordination and harmonization of regulatory approaches. Collaboration among regulatory bodies, therefore, is critical and crucial to address cross-border risks effectively. It's why forums like the IIS's FinTech Forum is so invaluable, as it enables that peer exchange and the sharing of best practice. To confront these risks, Asian supervisors, and actually globally, supervisors have responded to digital innovation with a range of regulatory measures, including regulatory sandboxes, technology-focused frameworks, and enhanced collaboration. These responses foster innovation, protect consumer interests, and create an enabling environment that ensures a resilient and dynamic insurance sector in the digital age. Subsequently, we've seen the emergence of regulatory sandboxes, innovation labs, enhanced licensing and approval processes to streamline procedures, and providing dedicated channels for digital insurance applicants. Encourages innovation while also maintaining regulatory oversight. Sometimes a misconception with innovation is that there is no regulatory oversight, or there's a regulatory Wild West approach, essentially. Supervisors have also developed guidelines and frameworks that address specific technology areas such as AI, IoT, Internet of Things, and blockchain to ensure responsible and ethical use. And lastly, consumer education and protection. Initiatives here include promoting transparency, increased disclosure, ensuring fair practices, and raising awareness about the potential risks associated with digital insurance products. And finally, supervisors have also been engaging with technology to support their own work through supervisory technology, also known as SupTech. This involves developing tools to assist them in their prudential and market conduct mandates. Examples include tools to identify financial distress in their respective market and to better understand the interconnectedness between the insurance sector and a wider financial system. From a conduct perspective, some of the tools being used are focusing on natural language processing to analyze data and automated transcription of telemarketing activities to identify mis-selling. Meanwhile, within the regulatory technology space, while these tools and solutions are being developed by industry, they support supervisors in ensuring that regulated entities comply with the authority's regulation. This information is actually taken from an FSI BIS A2I note on SupTech insurance supervision. It's an excellent note, and it includes examples from Asia, so I really would recommend reading that if you have the time. And finally, we have a number of resources available on innovation. It's a really focal topic for financial inclusion in particular. Our inclusive insurance training includes a dedicated module on innovation, and we have numerous webinars and blogs that can be accessed through our website and through the A2I Connect platform that I mentioned earlier. In the pipeline, we are also developing, as I mentioned earlier, a training on index insurance and a supervisory special on regulatory sandboxes. Regulatory sandboxes is a trend that is not going away. Supervisors are very interested in it. There are a lot of lessons to be learned from it, essentially. And we are hoping to kind of pull together a bit of a great session where actually supervisors who've got a lot of experience with their sandboxes can kind of come and introduce how they've approached this area, essentially. And we've got quite a few supervisors who are willing to, especially from the Asian region as well. That is the end of my presentation, and I think questions are coming at the end. Is that right? Okay, then thank you. That's the end of my presentation. Thank you, everyone.
Thank you to Pascal for that insightful presentation again. And we also saw Mr. Krishnan talk more about digital innovation in insurance as well. Now to bring on some Asian experience on index insurance, I'd like to invite on stage Mr. Sushil Dev Subedi, Director, Nepal Insurance Authority, on stage.
Namaste and very good afternoon. Distinguished guests, esteemed colleagues, ladies and gentlemen. I'm honored to stand before you today at this prestigious international conference of Asian Insurance Meet 2023. I would like to express my sincere gratitude to the organizing team of my organization, Nepal Insurance Authority, for this opportunity to share my thoughts and ideas with such a special audiences. In this program, we all are insurance workers from different capacities, so we must be familiar with index-based or parametric insurance, which is getting more attention in the recent days and has been evolved as an alternative way of conventional insurance products. It has less complexity in terms of claim settlement and more transparency in the claim evaluation processes as well. Since the downtrodden people cannot bear the claim-related hassle, it has become effective for them, and event related to the climate change is also pushing us to the parametric insurance era. So, ladies and gentlemen, as per the schedule, I, Sushil Subedi from Nepal Insurance Authority, want permission from you to present a presentation on the topic of Asian experience on index-based insurance in Asian context, especially in Nepalese context, because I'm just going to share about the Nepalese experience, what we have done till to date, and what is the present scenario of index-based insurance or parametric insurance in our context. My previous speaker, Pascal, has already explained so many things about, parametric insurance, and she has already defined it and how does it work. So many technical nitty-gritties are also been explained. So I think definition part is not required. Basically, parametric insurance is being popular day by day, even in Nepal, in many districts, especially in the southern part of Nepal, southern belt, lowland. We have piloted it, and some insurance companies has already gone to the full-fledged execution, and some companies are still doing in pilot phase. Basically, what we have found is these 7 micro-insurance policies seem to be more popular. Area ill insurance policy. Second is the flood index insurance. Third is weather index insurance. Similarly, satellite index insurance, drought index insurance, normalized difference vegetation index, and indexed life insurance policies. These seem to be the most popular insurance policies, getting attracted to the general people, especially targeted areas. In Nepal, so far we have experimented 4 parametric insurance. The first is the weather index insurance for Apple. Second is the flood index insurance for paddy. Third is the area yield insurance for paddy. And fourth one is the satellite precision-based agriculture insurance. These are the four index-based insurance we have experimented in our soil. So I want to explain product-wise what kind of experience we have and what are the outcomes of these experiments. Parameters. In weather index policy, index is weather index and parameter is rainfall and damage due to hailstone. These are the two parameters. On the basis of these parameters, insurance company pays the claim. Similarly, in flood index, flood water level is the parameter. And in area yield index, minimum guaranteed production, weight and dry weight. These are the parameters. On the basis of these parameters, insurance company finds out that what kind of yield is over there, and on the basis of that, insurance companies are compelled to pay the claim. So similarly, in last one, satellite precision-based agriculture insurance, we have found that this last one seems to be more scientific and more, less, complicated insurance policy. If we can spread this type of policy in Nepal, I think it will be most appropriate for the, downtrodden people too. In satellite precision-based agriculture insurance, heavy rainfall, drought, pest infestation, hailstorm, flood, snow, wind, etc. are the parameters. Now I want to go categorically. Number one, weather index insurance for apple. It was the first time. In 2016, we started piloting of this product for apple. Nepal is a very diverse state in terms of geography, in terms of climate. Between 150 kilometers of distance, we can find very cool area to the very hot area, 800,000 height mountain to the 70-meter height lowland. So we have a big diversity in terms of flora and fauna. So in northern part of Nepal, especially in the mountain side, high hill mountain, where there is always cool, there is a high possibility of the apple farming, and government is also supporting farmers to grow apples over there. So to support those farmers who are working in apple farming, in 2016, weather index insurance policy was started as a pilot project, and it was supported by UK Aid, access to finance. So on the basis of their support, we developed that product, and that is launched by an insurance company, and that became very successful, and now this policy is running as a regular policy. And product design on a study of the 20 years rainfall and apple yield data. For apple yield, insurance company took 20 years data, past experience they had to take, because in insurance we all know very well that data is everything. If we don't have proper data, then we cannot do anything. So we took 20 years data, and on the basis of that data, we prepared parameters for that particular farming, and payout scale design on the basis of the trigger point. If certain threshold is crossed, then insurance company pays the claim. It is the mechanism of this Apple insurance policy. What we have found, experience of index-based Apple insurance, in beginning, insurance companies were not finding any reinsurance companies, because reinsurance companies were not believing that this policy would become successful and it is appropriate for our soil. So insurance company were seeking reinsurance company in the different geographies, because it was very difficult to find out due to the belief. After some time, insurance company understood that it's really an amazing product and it can be, a very good product in future. So, knowing the possibility of that product, reinsurance company accepted, and we don't have any reinsurance issue right now. And they are quite happier to take this policy, except the reinsurance business. And local farmers' reluctancy to take insurance in the all-year period due to this disbelief. What do we mean insurance? Traditionally, insurance means we take, insurance policy in consideration of premium. We pay premium, and insurance company gives us that document, what we call insurance policy. And once loss happens, insurance companies, guys, they come to us and they evaluate and they examine our, loss amount. And sometimes they, deploy their surveyors too. And it is a very, complicated, thing, So this type of traditional thought was very difficult to, to change. So basically those people, farmers are those people who knows very less about insurance. So in the beginning, there was a heavy reluctance to farmers to take this type of policy, but later on, once they got the claim, they understood that it's a very good policy for us and it's quite appropriate for us. So it became very popular in the particular area. Demand of insurance increased once claim payout started. Obviously, if insurance taking farmer get the claim on time, then they believe that insurance actually works for us. So when they got claim, then they started to believe us, and this index-based insurance become easier to execute over the region. Lack of weather station affected the expansion. Our geography is very complicated, very complex, as I earlier mentioned. So to install, weather stations in each and every part is also not possible. So lack of weather stations in expected areas are also the, hindering point in this case. So far, in Apple Insurance, 11.3 thousand policies have been issued, and sum assured, Nepalese rupees 2 billion. It is the insured, total sum assured value. And amount of claim, 15.7 million rupees has been paid to farmers. Similarly, premium 16.5 million has been collected from, insured. And number of claim paid is 8.7 thousand. So it is the data. Okay, before entering to the second slide, let me conclude it. In this Apple index-based insurance policy, that experiment or that pilot project became very successful. And then after, that insurance company who was who has done that pilot project, that started to sell that product as a regular product. And farmers of those districts who are required to take this type of policy are taking it as a usual policy, and they are quite habituated to take this policy. So it means it is a very good experiment for us, that it is a very pleasant experience too, because if we prepare a better product for that particular farmers or needy people, we can sell them and it become commercially viable. It is a proof in our case. And it is a second product. This is for paddy, and this product is piloted by 2 insurance companies. And first is flood index insurance for paddy, but their philosophy is a little bit different. So I gave name ABC Insurance Company. For second one, I gave name XYZ Insurance Company. Flood is one of the major climate risks in Nepal, causing significant loss of life, property, infrastructure, agriculture production each year. Southern belt of Nepal is more prone to the flood risk. Especially in southern belt, we have 3 major rivers: Kosi in eastern part, Gandaki in central part, and Karnali in western part. These are not only the river, but they are the river systems. So many rivers merge to become that river. And more than 60% water of the Ganga River of India is contributed by these 3 rivers. So these are the very big rivers. And so the southern belt, especially the lowland, we say Tarai in our language, Tarai area, they are heavy, farmers are heavily affected in the monsoon season. Due to that reason, so we have to address the problem of those farmers from different types of policy. So flood index insurance became, we thought it will be good alternative for those farmers. So we insisted insurance companies to go to this product, and they started piloting on it. Insurance covers crop production losses caused by flooding. Indemnity was based on the measurement of the flood during the insured period at a particular river gauge station. In river, they keep a gauge station. According to the report of gauge station, it is found out that what kind of losses is over there, and insurance company pays the claim on the basis of that result, Data of the flood occurrence and the water level of the Karnali River of the past 58 years from Department of Hydrology and Meteorology were studied for the establishment of the index and payout structure. 58 years data was taken. That means it is sufficient. So on the basis of this data, we prepared that trigger level. It is targeted flood-prone communities of the lower Karnali region, western Nepal, cultivating paddy. Especially in Tarai region is, famous for paddy, paddy production, and farmers who are, completely dependent upon the paddy production and earning from paddy. If any kind of natural calamities happen over there, then they are, adversely affected. And to reduce their, impact, negative impact to their earning, we have to do something like that, from alternative measures. So we have done it. And approved by Nepal Insurance Authority with premium rate 7%. And it is 7%. In terms of rate, in index-based insurance, it is a newer one. It's not a traditional policy. So we found that, the feedback of farmers, we found that it is a higher price. It's not affordable. It's not easily affordable. So to make this price affordable, for countries like Nepal, we need some support, or we need some subsidy from agencies. Nepal government is providing us 80% subsidy in agriculture insurance, but not in, all parametric insurance. Apple insurance, that is being provided, but not in other, parametric insurance. So we have to, find out the subsidy. Otherwise, this policy for some period of time, not always. Once the people become habituated and the law of large number principle will be applied, thousands of people will engage in this policy. It automatically runs and it become, natural. But to reach over there, we need support from, government or other agencies, as a subsidy. It is the payout. Weather level in Karnali River in meter 10.8 and it's above. If then insurance company pays 10% of sum insured. If 11.81 and above level, then insurance company pays 25% of sum insured. And water level increases from 12.81 to 13.8 meter, then insurance company pays 50% of sum insured. Similarly, 13.81 to 14.81, insurance company pays 75% of total claim, sum insured. And if 14.81, that is a danger zone, if it crosses 14.81 meter, then insurance company will pay the 100% claim sum insured. It is the payment schedule. So first claim 10% payout was triggered when water level reached 10.8 meter on 17th September 2022. Last year, insurance company paid in this way. Second claim, 25% payout when water level reached 12.35 meter on 10th October 2022. Total premium, 995,000 and claim payout of NPR 3.5 million. It is the basic data what we have observed. The same product that is being piloted by other company, but the philosophy is a little bit different, Base of claim, floor level trigger, standing capacity of crop, pilot area, Bhajani Kailali district, the adjacent area of the previous one, number of farmers, 100, coordinated by USAID, number of claim paid, 31 farmers, amount of claim paid, 401,000 rupees, Nepali rupees. And it is the system. How does it work? Basically in Karnali River, not only in Karnali River, but in every river, they have some, especially more critical area, less critical area, and the moderate area. And you can see zone 1, it is a critical area, and you can see light, green, that is a moderate area, and the green one is the less critical area or the normal area. So area-wise, they have some parameters. They have set some parameters. On the basis of their parameter, they know that, the standing capacity of the plant, and it is day 1, period, T means the term, day 1, day 2, day 3, that increases like that, when the plant is inundated for a long time, or 3 or 4 or 5 days, then the root of that plant can decay, and so the loss can happen over there. So that is measured by the system, and insurance company pays on the basis of that trigger level. And third one is the area ill insurance for the paddy. And it is also a different, types of insurance policy. It is not on the basis of the measuring water level. It is on the basis of the yield, production level. This is piloted by another company in the eastern part of Tarai. Piloting area, sub-district of the eastern Nepal according to the agroecological zone. Based of claim, historical yield mechanism. That means how much you have to yield and what is the real yield. The difference between the yield, expected yield and real yield. That is the mechanism of this area yield insurance for the paddy. Yield measuring mechanism, crop cutting experiment supported by Pula Advisors. The product was developed and designed by Pula Advisors, and it was executed for 1 year. And government for the first time, when they came to Nepal, and they were hoping government agencies would support as a subsidy in premium, but unfortunately government withdrew that project and did not support to subsidy as a premium. So this project is discontinued now, and last year when this project was piloted, it was in our opinion, in our observation, it was a very successful project, but due to financial support, we couldn't continue it. Premium rate was 5%, pilot size less than 2 hectares, engaged farmers 15,000 plus farmers of MFIs. There was a MFI, the members of that MFIs were the farmers who took these insurance policies, and they were the beneficiaries. And the fourth one is the satellite precision-based agriculture insurance. An insurance company in partnership with the USAID successfully piloted digital crop insurance for the rice seed production. It is only for the rice seed production. Pilot area, Bardia, Banki and Nawalparasi districts. These are also the western part of Nepal, western Tarai. Claimants, 20 farmers, 7 Nawalparasi, 3 Banki and 10 Bardia. Suffered losses due to adverse effect of the heavy rainfall, drought and pest infestation. Claim settlement, all the claims were settled within 45 days of the claim reported. And so far, it seems to be the most scientific and most reliable parametric insurance. As per our experience, it seems to be very good product that is piloted even in our market. Mobile app-based service, working mechanism, how does it work? Taking pictures and videos of farmers regularly with accurate GPS location and compass headings. Satellite is used, and clouds also can penetrate. Clouds, there's no effect of cloud. Clouds are also penetrated by that satellite, and they can take accurate picture even in a cloudy season. So they can find situation of that plant, whether it is in drought, or it is in dry, or it is wet, or what is the real situation of that plant. It is found by the satellite data and pictures taken by the satellite. Instantly send pictures and videos to apply for claim during the disaster. Receive in-app notification and SMS alerts to and from insurance companies. They exchange the information to and fro, and they, on the basis of the information sharing and exchange, the system analyze and they draw a conclusion. On the basis of that, this system works. Web dashboard-based services monitor farms using satellite, weather, and picture data and its analytics, track and crop and livestock performance, communicate with agents and farmers and receive alerts on disaster claims, automatically generate disaster reports along with data export. Okay, this is the this satellite precision-based agriculture insurance policy. Among 4 pilot projects, what we have found is all projects, all policies, they have their special features. One policy is not appropriate to compare with other. One policy, if designed for the some special reason, and other policy may be designed for the other special reason. So all policies are appropriate for us, but if we can take satellite information or satellite data to the maximum extent in this index-based insurance, that would be very good in parametric insurance as per our experience. Standardization process. Once pilot project is finished or any experiment becomes successful, then that experiment should be materialized. Regulators should want that product, and that product should be the property of all insurance companies, so that all insurance companies could sell the product to provide the facility of insured all across the country. So insurance authority, Nepal Insurance Authority, is keen to standardize all the products. And the previous one, the first product, what I mentioned about Apple Insurance, that policy became grand successful, and that is running, that is standardized, and that is running as a normal regular insurance product. But 3 projects are still running. 1 is closed and 2 are running, and we have to find out that how we can standardize them. The problems insurance company faced during execution of that policy, we have to remove them, and any additional facility or any kind of additional feature we can add to make it stronger, we have to add on. And so in that way we can standardize insurance policy, and insurance authority is very keen to do this task. And new standard products with most successful piloting will be introduced, and it's our aim to introduce new products as well. And technical assistance from various related parties are also welcomed. If any international community or international agencies are willing to help us regarding micro insurance policies, regarding index-based insurance policies, or parametric insurance, we welcome them, and we want to work with them, and we want to work hand in hand. Challenges. So far, there are so many challenges, but the most important challenges I want to explain point-wise. Number 1 is the geographical terrain. It's clear, we all know very well that Nepal is very complicated in terms of geography. As I earlier mentioned, between 150 kilometer you can find Mount Everest too, and we can find 70-meter height lowland too, where there is now 45-degree temperature. So it's a highly diversified country. So only single product developed for one region, never work for this, entire country. Second, challenge is lack of adequate weather stations. We have very few weather stations. We have to add such stations if we want to go to the era of, parametric insurance, because weather stations and that type of, information is necessary for us all time. So lack of loss and damage related data, data information, the reliance upon data is, basically, is always, required for insurance policies, but appropriate data on which we can rely, that is lacking in our industry. So that is also a big problem. So insufficient satellite data in context of Nepal, it is also a big problem. Similarly, technical expertise and the manpower insufficiency. I think in the near future, if we will not be able to manage to uplift the capacity or capacity building of people working in regulator, then it will be a big problem, because insurance companies are willing to bring this type of policies, and if regulator will not be able to handle these products, and if we cannot regulator supervise, then it will be a big gap over there. So capacity enhancement or capacity building is a big issue for us. Similarly, high premium rate. Obviously, it's a high premium rate because we are in an experiment phase, we are in a piloting phase. Once the piloting is finished, and if we, start to sell insurance policies as a, ordinary insurance policy, then people will start to buy it, and the number of insurance policy will increase, and obviously the rate will down. Because we know when the number of insured increases, the premium will automatically decrease. So now it is a big challenge for the farmers. It's high premium rate, so we are seeking for subsidy from agencies, internal agency as well as the outside agencies. And similarly, insufficiency of subsidy, I already mentioned it, and low awareness from the farmers. We have 75% roughly literate people in this country. So in the society where we are living, 75% people are literate. So to make aware them about insurance is also very difficult. They may know about insurance, but what is exactly index-based insurance? It's very difficult to, teach them about index-based insurance or parametric insurance. So it is a very big challenge to us. Sometimes misleading information can damage the, knowledge level. Sometimes what happens is, we sell, insurance policy, life insurance policy, other policies, So people understand insurance, but not about the nitty-gritties of this type of policy. So it's a very big issue of, awareness. Similarly, my last presentation, last slide is, way forward. Enhance awareness of the product. No way we don't have any option. We have to aware the people. Similarly, expansion in other crops and areas vulnerable to different peril. Product development with use of the index data. Uses of the new distribution channel. We are heavily relied upon traditional distribution channel, agents, basically insurance agents, and we have to find out other alternative distribution channels too, because traditional distribution channels have their own problems, and we cannot get rid of that kind of problems if we don't find other distribution channels. Similarly, coordination with local governments. After promulgation of Constitution 2015, local levels are very much stronger in Nepal. So they are also a government, one level of government, basic level of government. We have to coordinate with them if we want to make successful this project. Parametric insurance, subsidy under index insurance. I already mentioned it, and expanding coverage in areas other than agriculture. Now we are focusing in agriculture only, and agriculture is not the only sector we have to go to. There are so many other sectors also. So we have to expand this parametric insurance outside of agriculture, and we have to go to industry, we have to go to business, we have to go to motor. So many other areas are there where parametric insurance are, waiting to be gone. So these are the way forward I have mentioned. Okay. This is my presentation, and thank you for listening me. Thank you for bearing me for this half an hour. Namaste. Thank you very much.
Thank you, Sushilji, for your insightful presentation on how there's a saying, when in Rome, do as the Romans do, right? So you have to adapt when it comes to the different changes according to the different geography as well. You have to develop new products and try and test them out as well. And he mentioned how in terms of apple or paddy, these different kinds of services were introduced in the insurance sector in Nepal. He also explained how technology is being used in order to monitor when it comes to the payouts and many different things as well. So we'd like to thank both Pascal and Sushilji for your presentation. Ladies and gentlemen, we are now heading towards a tea break. The tea break will be for 15 minutes. So please do get a cup of tea, coffee, be refreshed, and we hope to see you back for the last session for the first day of Asian Insurance Meet 2023. Thank you all. See you in 15 minutes. We are talking around the theme of building resilience of insurance towards emerging risks. We talked about the various risk factors like climate change, pandemic, and
this new digital technology that is rapidly changing and evolving as well. We're now heading towards the last session for the day, which is a discussion, rather not a very formal discussion, but this would be an informal discussion on leveraging a capacity building of supervisors for developing insurance markets. As you can see, we have set the table here on the stage. So I'd like to first invite our speakers on stage, and then I believe they have their set topics that they're going to be talking about as well. So I'd like to invite Ms. Manuela Zuimuller on stage as well, Head of Implementation, International Association of Insurance Supervisors. Can we please put our hands together, do a little bit of exercise, and then maybe invite her on stage as well. Can I also invite Mr. Arup Chatterjee, Principal Financial Sector Specialist, Asian Development Bank. I'd also like to invite Mr. Ronaldo Limbago, Regional Coordinator for Asia, Access to Insurance Initiative.
Okay. Good. Yes, we make the. Okay. And now I have 2 microphones. Okay. Hello? Yes. That's excellent. Thank you. Should I start? Okay, good. Then I will start. So first of all, thank you again for staying with us after a very long day already, but with super interesting and impressive presentations. What we are trying now to do in the next 1 hour and a half is we try to present you first a very short overview on capacity building. So I will start first. Then I think the A2I will come, so Ronnie will come, and then Arup will join us. The second part of this session will be a survey. So you will all be asked to respond to questions. And the third part will then be when Arup is coming in again. He will ask you 5 key questions for capacity building. And we are trying to have one big round table here in the room. And last, as part 4 of this session, we will reveal the results of the survey to you. So if you want to know what has come out of these sessions, you need to stay until the end. With this, I will start with a very quick overview on what is the IIS doing and how can we help you. So where is my, here it is. Now I can also, I know how to use it. I think I will start a little bit with the IIS itself. So the IIS is the International Association of Insurance Supervisors. We are a member-driven organization of more than 200 jurisdictions. More than the majority of it is emerging market and developing economies. So that is very important because this is why we are also engaging in capacity building and also in supporting the implementation of the insurance core principles by helping to assess the implementation with a variety of different tools. And we are the standard setter for insurance. So more or less the Basel Committee for Insurance, because we had this question previously. And the insurance core principles are also, their implementation is also checked by the IMF and the World Bank, for example, in an FSAP, in a financial sector assessment program. So it's really important to have the insurance core principles as a basis. And they are also flexible enough to allow proportionality because we are aware that there are different specificities in the different countries. So we have a 4 high-level goal plus an internal high-level goal, which is more how the Secretariat itself works. We are around 35 people sitting in Basel in Switzerland. And our high-level goal 1 is, assessing the market, assessing also emerging risks, and responding to market development. So that is the risk assessment leg of the IIS. The second one is the standard setting. We have done a lot until November 2019, where we have revised the majority of the ICPs, plus also added standards for internationally active insurance groups, the so-called common framework, plus a macro-prudential element with the holistic framework. Because in the past we had to designate globally systemically relevant insurers, and it was now decided by the Financial Stability Board in December that the holistic framework can replace this GSI, this annual GSI designation. So that was also finalized in November 2019. So more or less, I think our huge standard-setting program has come to an end. But of course, when we look at climate or also the macroeconomic standards in the holistic framework, where we did an assessment, we can see that here and there maybe an adaptation of the wording of an ICP is necessary. And tomorrow I will also say, okay, we have also done a similar work for climate, and we will adapt the introduction to the ICPs so that climate really gets a prominent position in the introduction. But the ICPs in general are universal, and they should not need to be adapted to each and every emerging risk that is coming across. Then number 3 is supervisory practices. This is what I'm hearing is the biggest interest from your side. Here, in particular, our so-called issues paper, which are more or less scanning a bit the environment and development and putting it together. So Pascal was quoting from an issues paper on technical innovation, which is from 2018. And then there are our so-called application papers. And the application papers, they give a practical guidance how to implement the insurance core principles. And there are also boxes with examples and case studies. So the application papers are really practical guidance. And then high-level goal 4 is observance of standards. This is our implementation assessment work, which we are carrying out with different tools that are really ranging from self-assessments. So we have a self-assessment tool at the website of the A2I, to peer reviews. And by the way, the next peer review, and that could be very interesting for you, is on enterprise risk management. It will be ICP 16. So we have now started to put the team together, and we will most probably have the survey, the questionnaire, launched over the months of most probably July, August, September. But that's not yet completely fixed. And then we have the member assessment programs, which I have spoken about, which are very intensive assessment programs for one jurisdiction on all the ICPs, where at the end there is also an observance level and a recommendation in the report, which is the closest to an FSUP. That's it. So I hope that gives you a picture of who we are, the IIS. And then the next slide, who are our partners? Our very renowned partners, the Access to Insurance Initiative. You have Pascal and Ronnie here. We have also heard Mubazziri, who is seconded, and that's a real opportunity to second someone to the A2I. Then we have the Financial Stability Institute, which is part of the Bank of International Settlement in Basel. They are also working for banking, and they are doing a lot of online trainings. Then the International Actuarial Association. Here we have this actuarial skills training together with the A2I, which is very sought after in 3 languages, English, French, and Spanish. And last but not least, also the Toronto Center. And I know that you are also working together with the Toronto Center, for example, on risk-based regime implementation. And not to forget, of course, also the partner, the co-partner partner for the conference here, the Asian Development Bank, where ARUP is representing it today. Forums. Forums are the major platform to exchange. It's a peer exchange platform to exchange experience, to ask questions, to exchange also on challenges. And in this respect, we have set up 6 forums in the past 2 years. I have already spoken about the Risk-Based Solvency Implementation Forum, the RBSIF, also together with the Supervisory Forum. Those, I think, are for your purposes the most relevant ones. Plus, and the RBSIF is jointly organized with the IMF, and the Financial Inclusion Forum is jointly organized with the A2I. That one is really with a huge focus on issues, trends, opportunities with regards to financial inclusion and microinsurance. And here we usually have tour de tables where supervisors exchange which steps they have taken in the past couple of months, last year, with regards to financial inclusion and microinsurance. And you wouldn't imagine how similar certain things are around the world with regards to microinsurance. And there is a microinsurance map on the A2I website, which is also very useful, because there you can see which jurisdictions have implemented microinsurance and which ones are updating their regimes. So that's a very useful overview. Then we have Financial Crime Forum. That's important. We heard it also today from Meena Kumari. And that's an extra one. And we are now, since a couple of months, also looking at greenwashing, which is not per se an issue from a financial crime perspective, but it can be misleading for policyholders who are seeking green insurance policies or green investment policies. This is why they are now also discussing the topic of greenwashing. Retirement Income and Pension Forum is also quite interesting. And for example, we have aging in the next RIPF in September. Because aging developments, aging populations is really impacting on social security and also pension and retirement income in many countries in the world. And I think in Japan, it has also been made a topic of the G7 aging populations. And the FinTech Forum, this is also where I think Pascal herself is part of it. And here we are also talking about RegTech and SupTech. And the report that Pascal was mentioning was published end of last year, I think in December. We can also provide you with a link. So the forums are our key platforms for peer exchange, for also asking practical questions. You can send to the members of a forum also a question if you have a particular problem that you want to solve and to benefit from the experience of others. And my last 2 slides are on FSI Connect. So FSI is the Financial Stability Institute from the BIS. They have an e-learning platform which is similar to the A2I Connect e-learning platform. And here we have in particular also a so-called climate training portal, which is also including banking. Sometimes it's also interesting to see what's happening on other financial sector parts. And last but not least, these are our basic and advanced trainings. The first one is really covering all the ICPs. That is a basic training for junior supervisors to get more exposure and knowledge on first one. The next one will start end of August, early September. We have not yet sent out the invitations. And the specialized insurance course, the so-called SIOC, is more focusing on internationally active insurance group and also cross-border cooperation. This is why it focuses on ComFrame, the holistic framework, and our famous insurance capital standard, which is supposed to become a prescribed capital requirement, hopefully by the end of next year. And then we will also have a global insurance standard. With this, I close, and I think I hand over to Ronnie. You will be next.
Apparently, I'm not tall enough, so I'm standing here. Okay, so thank you very much, Manuela. And after IIS, I'd like to present now A2II, our organization. Oops. anyway, while waiting, just let me explain. A2II stands for Access to Insurance Initiative. And well, our basic role really is to ensure that insurance is accessible to all sectors, especially the most vulnerable ones. And we do this through the capacitation of supervisors. Okay, so that's why we work closely not only with supervisors, but with other international insurance organizations as well, policymakers, to come up, okay, to ensure that we are able to come up with this enabling framework for a more thriving insurance market. Okay, we are based in Germany, in Eschborn. We're a small team of around 15, 16 people at the moment, but highly competent, I can assure you. And I'm glad that I'm given this opportunity to present to you what A2I does. So basically, as I mentioned, our core competence is capacity building. So how can A2II support you? A2II basically has the flagship trainings, which we offer regularly. And this includes the inclusive insurance training and the actuarial skills training. We also have peer exchange and networking where we discuss evolving supervisory practices, and we do this through the supervisory dialogues of A2II and IIS. And we also have the regional supervisory workshops and dialogues where topics of your interest, or hot topics as we call them, are of course discussed, and the purpose of which is to find out your concerns, your issues, in order for us to capacitate you better as supervisors. And then we have the multi-stakeholder dialogues, where new innovations and perspectives concerning insurance are, of course, discussed and taken up. And this includes our famous Inclusive Insurance Innovation Lab, the regional policy dialogues, and the A2II IAIS public dialogues. Other than that, we have self-paced learning and online toolkits. I think this has been mentioned already by my colleague Pascal and Manuela, but just to go over them again, as far as Knowledge Hub, this is the repository for publications and research, okay? And they are arranged by themes, okay? These are inclusive insurance fundamentals, regulatory topics, and emerging areas such as climate and gender, climate which we are discussing today, and gender, which I think will be discussed on the third day, okay? There is the A2II e-learning platform. As mentioned earlier, this is an e-learning platform, and it actually encourages you to be part of this, okay? Membership is free. And it hosts our flagship trainings, okay? And actually is right now our virtual community for learning, peer exchange, and networking. Okay, it is self-paced, and the risk modules are available there. The actuarial skills training, as mentioned a while ago, is soon to follow in this platform. So we invite you, of course, to take part in it. We have the Inclusive Insurance Regulations Map. It's a very, very interesting toolkit, actually, where it allows you to find out how far the other countries in the world, okay, have gone as far as implementation of inclusive insurance is concerned. Actually, if you're looking, let's say, for a topic on, to find out what countries are doing well in index insurance, you could just enter the topic, and it will show you the map, okay, which countries have been doing so far and what they have done so far. Okay. And we have the Supervisory's KPI lexicon, which actually is an interactive directory of key performance indicators for insurance supervisors, covering the 4 pillars of prudential soundness, market conduct, market development, and sustainable development goals. Using the self-assessment tool, actually you could find out how far you've gone, if there are any gaps or things to be done, you could find out through this self-assessment tool. As far as the implementation of inclusive insurance regulations, we've gone this far already. As far as implementation, full implementation is concerned, we have covered at least 35 countries, and another 19 are still under development. So maybe in the futures, you would see that the implemented portion already has gone up. Okay, we're looking forward to that. And just to promote, since as you mentioned, our core competence is capacity building of insurance supervisors. These are the upcoming A2II events for at least for the year. We are coming up with the IAIS A2II Public Dialogue on Climate and Data on 14 September this year. And then the inclusive insurance training is up already in the third quarter of 2023. We also have the A2II IIS MIN and IDF Consultative Forum on the interconnectivity of climate change and natural catastrophes on the 23rd of October. And to be announced soon, of course, is the training on climate and risk management, again with A2II, IIS, MIN, and IDF, and the A2II UNCDF partnership on index insurance. So basically, this is what we have right now, and we're very happy that we're here, and we hope that you would visit our website and follow us soon. We're here to serve you and to help you. Okay. So with that, thank you. And I think we could already proceed to the next part of our capacity building discussions, which will require you, of course, to bring out your smartphones. So at this point, may I ask already our participants to bring out their smartphones. This is actually a survey, the next portion. Sir.
If we can have the QR on the screen for the survey, I believe. Yes.
So, okay, as a capacity building session, we want to find out, get the feedback on how far we've gone, what we've done so far, based of course on your observations. In this particular case, we're referring to A2II and IIS. And to start the survey, it's actually a simple survey of 15 questions. May we ask you to use your smartphone to scan the QR code provided on the slide? Have you done it? Okay. Once you have access already to the survey form, please answer the 15 questions that we have prepared. They're actually simple. Most of them are multiple choices. Okay. I think it's only the last question where you're required to write something. Okay. From this survey, we'd like to find out, we'd like to get a feedback on how we performed already and what improvements could be done and what other things we could do for you. Okay. And at the end of the session, the entire session, hopefully we could share the results with you for your reference.
We'll be sharing the survey results by the end of this session as well. So please do take some time out. It is a very quick survey. Once again, we have the QR on the screen. So please, ladies and gentlemen, make sure that you scan the QR. It'll take you to a questionnaire that you'll quickly have to fill. That'll give a lot of information that can be discussed and will be very helpful during this session as well. So humble request to all, if you're facing any problem in terms of accessing the QR, please let us know, and our volunteers will be there to help you.
So we're giving you 10 minutes to answer the survey, after which we proceed to the next portion.
Ladies and gentlemen, one more time, if you're facing any problem filling the form, please do let us know, and our volunteers shall help you. We have the QR that you can scan via your smartphone, and it will take you to a short questionnaire, a survey that we hope all of you will be able to participate in. And the results of the survey will be crucial as we move forward in this session and discuss the outcomes of the survey as well.
Okay, I think our time is up. I hope you're all able to complete the survey and submit your answers. As mentioned a while ago, the results will be shared with you at the end of the session. So thank you very much for your cooperation, ladies and gentlemen. And now I would like to call on the group to go into the discussions on capacity building, which is very much interactive. Group?
I'll use it. Thank you, Ronnie. There are no gifts or anything for survey participants. That might be a good incentive. In economics and insurance, we talk of incentives. So I don't know whether there are any incentives. Maybe no, not today, maybe. Good afternoon, everyone. Particularly, let me acknowledge Chairman Nepal Insurance Authority, Shri Silwalji, and of course, colleagues also and friends from the Nepal Insurance Authority, whom I have seen after a long time in one room, and also members from the supervisory fraternity. Again, being at one point in time a member of that fraternity, it always gives me good reminiscences of my association with them. So now I am working for the Asian Development Bank. Before I start, let me give you some background of Asian Development Bank also, since the previous speakers also introduced their institutions. So the Asian Development Bank is a multilateral development bank comprising of 68 member countries, out of which 49 belong to Asia and the Pacific. Our geographic expanse starts from the international dateline in the Pacific to the European borders, which includes the Transcaucasian countries. So we are quite big in terms of the area we cover. Our mission is to have a Asia Pacific which is prosperous, resilient, and sustainable. And ultimately we see it as something which will help in reducing inequality with increasing incomes over a period of time. Two areas of focus of the bank are climate and gender. You will be hearing a lot about climate and climate risks. So one of our major missions is to ensure that the climate risk can be adequately financed through mitigation and adaptation measures, and the targets of net zero alignment, which the nations pledged at the Paris summit, are achieved. In July this year, 100% of our sovereign operations, by July this year, 100% of our sovereign operations will be Paris aligned, and 75% of our non-sovereign or private sector solutions or operations will be Paris aligned. This is important for us who are in the room because ADB works with the developing member countries in the region where ADB can support the jurisdictions from Asia Pacific, especially be it IAIS members or be it non-IAIS members. So IAIS really doesn't differentiate that way. This is a regional public good, training supervisors, introducing, ensuring orderly observance of IAIS core principles and standards is something which benefits all of us. And if they are implemented from a jurisdictional perspective, you will become more attractive for foreign investment from a reinsurer standing, from a credit rating agency standing, and all these things. So we did hear in the previous sessions today in terms of the good work all of you have been doing and how IAIS is looking at supporting and also with the access to insurance initiative. The ADB has been like a silent partner in this process. We have been supporting a lot of insurance projects over the years, including capacity building, both at country level and also at regional level. And what we wanted to gauge today, is, and this will be, we will be posing 5 questions, and I would like you to speak out as frankly as possible. That will help us in giving shape to our future direction in terms of making you stronger, making you swifter in terms of acting to different problems and eventualities. So the first question today is about what type of training or technical assistance support have you benefited from, and why do you say that is important for you? So if you could raise your hands, and we will have ushers who will help you in terms of with a mic. So when you respond to the question, we would also encourage you to consider how do you evaluate that effectiveness? Why do you feel it has been effective? What is those indicators? And also, what would you like to propose if a particular indicator is not there for some reason? So what training, TA support have you benefited from, and why? That is the question. It's a very simple question. But, and the training needs vary at different levels of your assignment, which you are currently performing. If you are a new recruit, you will have a different training need. If you have spent 10 years, 15 years, you will have a different need. If you are in the senior, part of the seniors staff of the supervisory authorities, you will have different needs. And of course, what is that thing where we can support, basically? I will, okay. Can you introduce yourself, please, and can somebody help with the mic, please, sir?
Thank you for giving this opportunity. My name is Waravet Cholasin from the Asian Institute of Technologies. And at our university, which is the postgraduate universities, international university based in Thailand, now we are also running a TA project of the ADB. And the TA project is related to the climate resilience to farm production. So I think this is something that we are very familiar with. And I think the extensions of the climate resilience production, farming production there could be the financial inclusiveness and financial literacies on the insurance aspect there. So the TA, and I speak this also on behalf of the country, Thailand, and also the 2 colleagues from the regulator is also here, that the TA should be something run on the ecosystem. That there are several users of the regulation under that. So that we believe that that type of the ecosystem can indirectly build the knowledge and the capacities on the regulation, the implication, the regulation, and also the application of the regulation in the real situation. And that would be something that we need to find a way to set up the new indicators, objectives of the projects, and outputs indicators so that we can see how the system would work on that ecosystem. It's like a semi-sandbox, which I haven't seen that ADB supported that, but it doesn't say a sandbox, it's like a piloted project. So I think this kind of the ecosystem is very important because it will be comprehensive rather than silotic. The second is that is the engagement of the stakeholders from the national level, the regulators, the business players, and also the local, the user, the customers are very crucial, and we should have the kind of instruction from ADB that we should have the plan to engage the local stakeholders. In terms of the measurements of the effectiveness, it may not be on the financials and capitals and also abilities and penetrations alone, but also in terms of how that program that we piloted can be integrated into the continuous practice at the local level through the local governments, to the SME, and also through the local farming enterprises, for example. So having said that, I have not seen very much the example of agri-insurance like in Nepal happening in Thailand. So, and Thailand is not eligible to receive the loan, but I would I would be very happy if ADB can give the TA on that basis in relation to the local livelihoods and grassroots production system. Thank you.
Thank you for that answer. I will respond to all of you at one go for this question. Any other responses? Maybe I'll take one or two more. Yes.
Thank you, sir, for the opportunity. I'm Rajendra Mahajan from Nepal Insurance Authority. Actually, we are getting some training from Toronto Center in regard to the risk-based supervision and risk-based capital also. But before that, I would like to know what are the benchmarks that as an insurance regulator need to be prepared before moving to risk-based supervision, as well as industry preparedness. Also, we are gradually moving towards digitalization, so we need some support in regard to InsurTech and SuperTech in that part also. It will be great benefit for us. Thank you.
One more. Can anybody? Huh? It can be from any. This is we are collectively. We work in partnerships. So.
Recently we had conducted a training session in Bangladesh for the regulator staff, where we spoke about what you call risk-based models, on-site inspection, etc. I think there is somebody who has come from the Bangladesh Regulatory Authority, IDRA. I think you should ask him what benefit he has got from this training. I think that would make very useful to other regulators also sitting here.
That's right. Well, Bangladesh.
Thank you very much, sir, for referring me about the training session that you have conducted in Bangladesh on the risk-based supervision as well as ORSA and other relevant issues. To be honest, that we have learned a lot about the risk-based supervision as well as others allied matters. We are going to introduce the risk-based regime in our country. In that context, this training was very fruitful for us, and it was a very required one for us. And we basically learned technical issues from this training session. It was a very fruitful one. Thank you.
Okay. Anybody else who would like to contribute to this question by providing a response? Okay, so let me, because I am also conscious of time and I have to cover 3 more questions. And plus you have the survey results. So if I gather from these 3 responses, my takeaway is that insurance supervisor and their role in terms of supporting the real sector has not come out to the forefront that way. And perhaps that is an area which needs to be looked into greater detail. The example provided was about agriculture insurance, where it seems there is some connectivity with the real sector, but not in others. Well, in the Asian Development Bank on this thing, we have been working with the governments in our, what we call our developing member countries in terms of supporting the real sector. We work with banks, We worked with insurance companies in terms of developing products and also developing guarantee schemes and other types of risk transfer, that is risk sharing and risk transfer schemes. So we are looking at those types of financing methodologies in terms of funding, financing the real sector activities. We are also looking at the green finance also in terms of supporting subscription of green bonds where insurance companies are major subscribers. So that is also an area which is becoming increasingly relevant. And also to incentivize uptake of green technology, we are also looking at supporting pilots where what you call performance guaranteed type of products can be introduced in the market so that those types of new technologies can be adopted and banks are willing to lend. Coming to the second part, and of course, this is a dialogue which needs to happen. It's not only about supporting countries, but ADB is a bank. We are looking at 2 or 3 things, as I mentioned. One is, of course, how it is aligned with to the climate, how it is aligned with gender, and also we are looking at transaction opportunities. So we are not a donor or a grant-making organization. We, of course, provide technical assistance, but we are looking at how it can improve our transactional opportunities so that we remain engaged over a longer period of time and not only develop capacity of individuals in terms of human resources, but we also develop institutional capacity. So that is also something which we need to bear in mind, that is what will ultimately translate into a sustainable form of development. Coming to the question, the response on training, well, yes, this is also something we are looking very closely in terms of seeing how these basic level of trainings can be upgraded to more intermediate and advanced types of training. Of course, ADB is not an insurance organization, but we work with partners, which includes the IAIS and the Access to Insurance Initiative, but also a lot of other think tanks and academic partners where we can bring the latest knowledge and thinking in terms of how some of these ideas can be implemented in practice. Say, for example, when you talk of risk-based supervision or risk-based capital, what is the scope of introducing RegTech and SupTech in this area? We know that emerging market jurisdictions have a skills gap in that sense. You do not have so many actuaries, they are expensive, and some of the solutions may not be fit for purpose. So this is something, again, we work in partnership with the institutions and develop something which is which is in tune and or in tandem with the country's needs and the institutional requirements. Let me move to the next question. If you can move to the next slide, please. The next question is on what has been the specific role in terms of developing proportionate regulatory and supervisory frameworks. This is an important area because the standards which the IAIS develops or other international standard setters develop is often seen by many in this part of the world, especially the emerging market, as something which is meant only for developed jurisdictions and not for developing jurisdictions. So therefore, a proportionate approach needs to be adopted when you develop regulations and supervision related regulations, basically. So when I mention this, I am often reminded of the chair, those days, Peter Braumuller used to be the chair of the executive committee, he always used to say proportionate means that the countries should not be linked to lighter observance, but they have to take it, the observance standard which the IAIS sets, the ideal one, as an aspirational one. So you have to decide on a pathway how you aspire to reach that point. In the years ahead, it may take you 3 years, 5 years, 10 years, but ultimately you need to reach there. So proportionality means that you keep on improving in terms of observance of the international principles and standards, and it has its benefits. You have a better FSAP score. The credit rating agencies recognize the financial institutions and the policy and regulatory interventions and things like that. So, and also proportionality means that you do not lower the bar in terms of risk treatment. For similar risk, there has to be similar risk treatment. If the risk is high, of course, there has to be higher capital requirements, be it a small jurisdiction or a large jurisdiction. And if the risk is low, you can have a lower capital requirement. I'm making things very simple, but just for ease of understanding that way. So in this sense, what has been the role of jurisdictions in your country? Can somebody share any examples in terms of how you have introduced proportionate regulatory regimes, which not be in terms at par with what the IAIS proposes or other international standard setting bodies, but it is okay for your jurisdiction? Maybe somebody from IRDA, or there are a lot of examples there, I know. Yes, Meena, please. Can somebody pass the mic to Meena, please? Thank you.
In terms of IAIS standards, maybe I'll first start. Initially, we had this FSAP exercise in 2011, where we have been gauged as mostly observant in largely observed in many things. We had very few where we have partially or not observed at all. So even today, when we are drafting our regulatory framework or when we are looking at the supervision part of it, we do get guided by the IAIS core principles, and many occasions we do quote these ICPs as a guiding principles to stay in the international spectrum, as well as to make ourselves build our capacity in terms of looking at what is expected out of regulators. And during the COVID times, what we did is, as part of capacity building within ourselves, we had identified resources within ourselves to take up each ICP and give a lecture to all other officers within the organization, so that everyone gets apprised of what the expected global standards are. So that way we have been taking that as a benchmark for us, but we don't say that we 100% comply with it, but definitely we do that. We keep that as a benchmark, and jurisdiction specific or environment specific tailoring we do make when we get into that. In terms of risk proportionality or the frameworks that we are developing, as you are aware, IRDA is moving towards risk-based supervisory framework and risk-based capital framework. Currently, the regulatory framework is one size fits all, which is applicable to all. And to that extent, our regulatory framework is looking at a broader picture and not at a picture where one has we can differentiate the supervision or regulation in terms of entity-specific issues. So that is from IRDA. Thank you.
Okay, thank you, Meena. And maybe let me now also request our delegates from Indonesia also, another big G20 country, and they have done a lot of good things, I know, in terms of how they are approaching this this topic. You can be brief, you don't have to be too, whatever is, I'm not putting anybody on the spot, just trying to understand how you're doing it.
Thank you. Namaste. Indonesia is actually as the same like India. When we make a regulatory, we always see the IIAS or ICP based on that guidelines, and we draft the regulation. We also ask the industry to take this discussion, but sometimes we have many barriers, like Ms. Pascal said, the industry feels that like it's too heavy, the environment is not ready, something like that. So we need to make an adjustment. So it's not exactly that we can perfect to IIAS or ICP guidelines. That's from the regulatory, our making regulatory. So.
Okay, thank you. Anybody else who would like to share their experience? Any other jurisdiction? Sri Lanka? Would you like to share your? You have also done a lot of good work. Don't feel shy.
I'm Maliti from Sri Lanka. And I think, unlike India, we are studying the ICPs and we are actually trying to include those things in our act, and we are trying to amend the act, and we have proposed certain amendments that will definitely include ICPs. So rather than adopting rather than doing what we think is best, we are trying to get things, guidance from ICPs, and according to that, we are trying to include certain things into our act. So other than that, we have very recently, we are to increase our inclusiveness, because we see that the penetration level is low with regard to insurance. We are trying to do certain activities like encouraging our insurance sector to introduce certain products in micro insurance, and for that also we are trying to, without amending that, because that takes a lot of time, we are trying to actually we are trying to introduce new rules so that we can encourage the insurance sector to do micro insurance, because we have no way of issuing license for micro insurance companies without amending the act. So likewise, within the framework, we are trying to do certain changes, not to forcefully make compulsory for the insurance sector to do things, but to encourage them to take certain initiatives to increase inclusiveness. So that is our target. Thank you.
Okay, thank you very much. I think that gives us a fair idea, I would say, in terms of how different jurisdictions look at proportionality. So there is no one rule or one way of looking at things. There can be many ways at looking at things. Socializing the ICPs is one way of achieving that. Encouraging the insurance industry to come up with products is another way to encourage also development of the market, because that is something which I think it was Mr. I forget the name, the governor from the central bank in Maldives. When I was with the IAIS again, he mentioned Maldives became the member of the IAIS at those days, and we were having our annual meetings in Florida, and I said, well, so what are you planning to do in terms of implementation of IAIS insurance core principles and standards? And he gave me a very interesting response. He said, we are a new regulator. We have to first build the roads and ensure that there is traffic on the roads before we start putting traffic lights. So different countries have different needs, and just becoming a member of the IAIS should not put pressure on you. There is an important developmental role also of the regulator. And even before the FSAP, when I was still with the IRDA did a self-assessment, and we got the self-assessment peer-reviewed by two very senior insurance supervisors outside the country who were involved as FSAP assessors. And of course, they were okay with everything, but they said the developmental role of the IRDA and the regulatory role of the IRDA perhaps is in conflict. So I'm not going into those details, but let us move to the next question in terms of the next slide, please. The next slide. Yeah, so you have heard responses to two questions, and maybe this will help you to respond to this, and maybe this will be quicker that way. What should be the focus of training and TA support in the next 5 years? And what are those challenges and emerging issues in insurance regulation and supervision that you would like to address through capacity building? Again, as I mentioned, we will work in partnership. The World Bank and IMF are not present here, but they are also part of this initiative. We will relay our feedback to them also, your feedback to them also, and it would be interesting to hear from you. What do you see as the most critical issues in the next 5 years? And let me start with Cambodia this time. I was just in Cambodia last month, and I met His Excellency Mae Wan. He's a very old friend of mine. He had a lot of ideas that way. Let me hear from you.
In terms of regulator, insurance regulator of Cambodia, the one thing that we really focus on into the next 5 years is currently the weakness is the lack of collaboration with the relevant stakeholder to enforce the compulsory insurance. And this is one that we are now in drafting the compulsory insurance of all type of vehicle. So this is one that will really to focus on, because we need a lot of we need to more understanding about the system that work with the cross ministerial. And also the second one that I would like to address is about the disaster risk. This is one also the important one that we need to address as a in Cambodian market. We haven't have any climate risk insurance or disaster risk insurance or agriculture risk insurance introduced into the market yet. And also we haven't had any policy or regulation or framework to support to those needs in the future as well. Even Cambodia doesn't face a series of the climate risk or disaster risk, but I think it's still important for the people in the rural area that they still need help, and also important for the government body as well, because when the people in the provinces they face the disaster risk, something like that, we use a lot of the government fund to support those people instead, rather than have the insurance sector or private sector to support to give the protection on that part. Yeah. Thank you.
Okay, and you'd like to...
May I add up a little bit? One more thing is about the fintechs or insurance technology, insurtechs, because since now the world is leaning toward the comprehensive use of digital technology, so we think that the training that focus on supervision technology, subtech and regtech is also important for the regulators to know how to leverage the existing technology for developing the insurance sectors. Thank you.
Thank you. Maldives, would you like to respond? I may take 15 minutes more to wrap up. Personally, I'll take another 5 minutes, but for the others to share the survey and also kindly bear in mind.
Thank you for providing this opportunity. From the Maldives experience, given that we don't have an insurance sector at the moment, I think over the coming years, one of our main priority will be development of our regulatory framework. So such as development of solvency regulation, takaful regulation, intermediate regulation. And of course, the big challenge is, one of the main hot topic is climate risk. So Maldives has always been prone to climate risk. And we have seen the trend where reinsurers are pulling out from the industry as well. So we hope to get technical assistance as well as training programs, especially focusing on this, how we can address these climate risks as from the regulatory perspective. Thank you. And
I would like to add something to what my colleague just said as well. Like you've mentioned, our governor has said that there's not enough traffic maybe around 10 years ago. But today, there's lots of traffic, and then we are struggling to manage it. So the situation is quite different today. From the supervision side, our main challenge right now is IFRS 17 implementation. Ideally, we would have preferred not to adopt it at the moment, given the size of the insurance industry. But the government mandates all the companies to a blanket adoption of IFRS. So we had to instruct the companies to adopt IFRS 17, and we are currently in the process of changing our regulatory returns to align with IFRS 17 as well, to reduce the burden on insurance companies to prepare 2 sets of returns. So I think that would continue to be a challenge in the next few years as well, and we would like to get some technical assistance.
Thank you. And one last person there at the back, you want to speak.
Thank you so much. When you talk about technical assistance and training and capacity development, the need of a Maldivian market and the need of a developed market and the need of a market like Nepal market could be different. You see, if we try to embark, on a risk-based approach or risk-based model on external, on the basis of the external pressure, there could be, imminent danger on adopting a new model. Whatever the model that we have, we are habituated to at present. If we try to shift to a new model, there could be a gap. So our focus to the next 5 years should be how do we, adhere to that system. I think our focus should be there. Along with that, Nepalese, insurance market is facing new challenges like, subject to, money laundering, fraud, how we count these issues. The focus should also be there, I think. Thank you very much.
Thank you. So, of course, to sum up, we need to take a differentiated approach, of course, and different countries will have different aspirations. That is something which they have to decide in terms of how much time they need to take to reach a particular point. In terms of areas of focus, very much climate risk will be one. Do you call it disaster risk, transition risk, or whatever? That would be definitely be something which will be gaining in importance on the agenda. looking at appropriate risk-based capital regimes to incentivize or to incentivize insurers to underwrite products, because ultimately one of the other major tasks or objectives of any regulator or policymaker is to narrow the protection gap. So that is also a challenge. You cannot prescribe high capital requirements and at the same time widen the protection gap. So that balance will be an important issue and also something which you heard in the presentation on agriculture insurance from Nepal. The role of subsidies, the role of taxes, all those things will come up. Banks or institutions like the ADB are well equipped in terms of supporting some of these topics or areas, taking a more broader view of things where insurance is seen as part of the solution and not the solution. But definitely the areas which you have highlighted become important, and perhaps in discussions, and that is my personal take, you also need to have the bankers or the lenders in the room, because ultimately it is the people, especially when you are talking of inclusive insurance, they are not looking for protection. They are looking for credit. So what can help them ease the access to credit, that becomes very, very important. The next question, please. And the final one, I think I'm still overstepping the time, but let us still move there. Next question. Oh, that's it. So basically, this is the last and final one. Is there any support in your country for supporting climate risk insurance? We will be discussing this more in detail tomorrow. The climate risk is both the physical and transition risks. And what type of support are you getting? And are insurance supervisors getting any specific support? Or do we want to know from participants, we want to know from participants their role in such developments. And let me pick up Bhutan this time. They have been silent. And I know that that is a country which is more looking at net positive developments or financing that way. There.
Yeah. In case of Bhutan, we don't have like specific climate risk insurance, but with the technical support from the ADB as well as other donor agencies, we have been doing some work on green finance, but not particular to the climate risk insurance. Yeah.
Okay, thank you. Anybody from Nepal, the host country, because this is also a lot of climate risk related issues in Nepal. Anybody would like to provide a feedback on?
In Nepal, we are not getting any particular support in case of capacity building, but World Bank has supported us to draft the climate risk directive, and we have already issued the directive to the insurers as well. But we are going to implement that directive in transitional basis. So transitional provision has been made considering the capacity of the industry. So that's the state right now, sir. And regarding disaster risks, property risks, also World Bank is supporting us to develop the risk-based pricing. That's all.
I think, thank you very much. This has been very quick. But the response, what I gathered from is that...
Excuse me.
Yeah.
May Indonesia add?
Yes, please. Yes, please.
Yes. Indonesia doesn't have a specific supporting climate risk insurance, but the government has already insurance paddy. Insurance paddy, the subsidy comes from the government, but it doesn't work quite well. And we also have 2 more climate risk insurance. One is business-to-business model, Zurich Takaful with Nestle, and it works really well. And the other is from our own state enterprise, working with JICA from Japan, and the subsidy from the JICA, and the claim is more higher than the premium. So I was hoping that we can get a technical assistance from ADB how to manage a perfect model business for insurers to take interest in index insurance, because they said that it doesn't work well for commercially. It only works with subsidy from other parties. So that's a little bit our
Thank you.
experience.
Yeah, well, yes.
Thank you.
So definitely these are challenges. There is no right answer. The climate risk is evolving. This is a new subject. This is a new area. We are all learning together at this moment. I don't think anybody has an advantage in terms of experience, be it the developed country or the developing countries. Maybe the physical risks we thought once upon a time are less in the developed world and more in the developing world. But today, that difference is gone, and then the transition risk, of course, is more in the developed world today. So we have to come up with innovative solutions. We have to also come with smart regulatory approaches. They have to be fit for purpose that way. Climate risk, as it looks like, is an important area where supervisors will require additional capacity. I do know that the FSI, the Financial Stability Institute, who are observer members of the Network for Greening the Financial System, they are working with the IAIS in terms of developing a repository of information to equip regulators on different climate risk-related training. It includes both banking, insurance, and securities markets. So we need to look at all those things. Digital is one area which is also very, very important. And with artificial intelligence, big data, and other issues coming to the fore, we should not lose sight of this important risk, the cyber threat, and also the digital transaction-related risk. This is something which is ignored nowadays because of the too much focus on climate. And finally, most of Asia is young, but longevity risk definitely is looming on the horizon. We need to take steps today to ensure that contingent liabilities of the government in future can be better managed. But those are areas where insurance regulators need to come up to speed. So with those words, let me conclude and thank you profusely for your excellent feedback. And let me pass the mic back to Ronnie for sharing the results of the survey. Thank you very much.
We're not going to show you the results of the survey, so may I ask the technical people to flash it on the screen already? Okay, so to the first question. Okay. Oh, by the way, first we have 46 responses. Thank you very much. Okay, to the first question, what is your role within the Insurance Regulatory Supervisory Authority? We have 17 actually come from the department heads, and the second group is supervisors, okay, in the organization. So we have a pretty good profile as far as the respondents are concerned. And as to the familiarity with IAIS and A2II capacity building tools, we have a good answer of somewhat familiar, and then a tie between very familiar and not that familiar with 9. And one answered, I am not aware of the tool. So maybe now you are aware that we have the tools. Okay. Next, please. Here, sorry. Yeah, sorry. To the third question of participation in any capacity building programs or training offered by IAIS or A2II, no, actually, was more. It's more than yes. So probably we have a lot of work to do to get the no back to the yes. As if your answer is yes, please rate your overall experience with capacity building programs or training. We have a good answer. Okay, good was number 1 with 15, and then excellent came at number 2. Okay. As far as which specific capacity building tools have you used, meaning you have actually integrated into your work. Okay. The top answer actually is it's a tie between the IAIS forums and the FSI Connect programs. Okay. This is followed by the IAIS training programs with 6. Okay. As to rating the usefulness of the capacity building tools that you have used, they were moderately useful, and the very useful actually tied with 13 respondents, 13 answers, so we have a good feedback on that one. In what areas have capacity building tools help enhance your skills or knowledge? The top answer is in insurance regulation and supervision with 26. Okay. And have you been able to apply the knowledge gained from capacity building programs into your day-to-day work? It's a nice response, with 24 having said yes, they were able to integrate it into their day-to-day work. Number 9, if the answer was yes, please provide an example of how the knowledge gain has been applied. So we do have 20 responses. Actually, the biggest one is in supervision and regulation, and then risk and insurance. Question 10 is, any suggestions for improving the existing capacity building tools or recommendations for new tools or topics to be included in the future? We have 15 responses, and well, capacity building and training appears to be the number 1 answer, but to be specific, digital tools, I think, went well. It went high. Risk mitigation and trainings on IFRS. Okay. And then in which specific areas would you like to enhance your capacity? Multiple answers again. Insurance regulation and supervision again, topped it with 30, followed by risk assessment and management with 24. Okay. The third one is more on accounting. Question 12 is, how do you prefer to receive capacity building support? So this is basically the modality. Of course, I think we would like to have it in person. There's it's a top answer of 31. And then a balance of both in person and, of course, basically the hybrid type. Okay. 13, preferred duration, short term, a few days a week is the top answer with 24, and then followed closely by medium term. Okay, well, a few weeks to, covering a few weeks, okay, as what we did with our training programs. And how would you prioritize the importance of capacity building in your daily work? It is essential, actually, for your professional growth. It's the number 1 answer, followed by helpful but not crucial. Okay. And finally, are there any specific challenges or constraints in accessing capacity building opportunities? We had 18 responses. Funding, constraints training, time, lack of resources, and what's this? Time constraints, that's it, basically. Okay. So those are the top 4 answers as far as the challenges or constraints are concerned. So we thank you for answering the response. Actually, we would actually process this more and form part actually of the capacity building plan we have for Asia. So I'd like to call on Manuela now.
Thank you. Thank you. Thank you so much, Ronnie. That was really great, and it's interesting outcomes of the questionnaire, so we will share it for you. And I also got a glimpse of adaptive learning, so adapted to the personal needs and also adaptive learning. I think this is something that the FSI is currently also trying to implement. With this, I don't want to stand longer between your free hour before dinner. I would like to thank you so much. It was a great day. And I would like to pick up what the chairman of the Nepal Insurance Authority said in the morning. He wanted this to be a catalyst for exchange and peer learning of the day, and I think we have achieved this. And thank you so much for your vivid contributions and all the discussions that we had during the day. It was really fantastic, and in such an environment, I think you only can get inspired. Thank you.
Thank you very much to all our distinguished guests, panelists, and speakers for shedding light. And I think that survey also was quite insightful. We could see all the regulators who were present, who are present in this room, what were their thoughts while they participated in the survey. Now, as we come towards the end of the program, may I please invite on stage Chairman of Nepal Insurance Authority, Mr. Surya Prasad Silwal, to kindly present these token of appreciation to our co-organizers. We have 3 co-organizers who've joined hands with Nepal Insurance Authority to make the Asian Insurance Meet 2023 possible. We'd also like to firstly thank International Association of Insurance Supervisors, and on behalf of IAIS, we'd like to request Ms. Manuel to kindly accept this token of appreciation. It is a very beautiful mandala. We hope that it'll remind you of the conference and of Nepal. Thank you to International Association of Insurance Supervisors for being associated with this event. We'd also like to thank Asian Development Bank, and representing Asian Development Bank, we'd like to request Mr. Arup Chatterjee, Principal Financial Sector Specialist, to kindly join us and receive this token of appreciation. And on behalf of A2II, Access to Insurance and Initiative, may I please invite on stage Mr. Ronaldo Limbago and Ms. Pascal Lam jointly to kindly accept this token of appreciation. I know Ms. Lam was all set to capture this moment, but we'll make sure that our photographer captures this moment and sends it to you. Thank you very much to A2II for being a part of Asian Insurance Meet 2023 as well. Thank you, ladies and gentlemen. I'd like to request Chairman Sir to kindly stay back, and let's try something ambitious. We'd like to take a group photograph with all the participants. So how we'll manage to do this is we'll have maybe 1 row standing here, another row standing down below, and one more, I think 2 rows on top and 1 row on below. So I'd like to request all our ladies and gentlemen to kindly join us in this group photograph. I think firstly also of our ladies and gentlemen on the stage, I think a group photograph with the 4 of you, and I'd like to request everyone to join as well.